That's pretty snappy music, isn't it, Ari? I forgot, Ari, that I didn't put in the slides and introduction for either of the speakers for us. So we'll probably just ask you to give a brief description of who you are. I didn't put it in the slides, so we'll just have to do a little introduction along the same way, kind of.
No problem.
Okay, are we ready to get started? Ready or not, we're getting started. Okay, good morning, or I guess good afternoon for some of you. My name is Kathy Christensen, and I am producing today's webinar along with Michelle Pierce. You do not need a microphone or a webcam. We start everybody on mute to reduce background noise. Somebody did ask how they can make sure that they are on mute. You don't have to worry about it. We've got it so that you can't unmute yourself unless we tweak a setting. Last night, my daughter was on my couch watching a college lecture, and some people were saying some seriously stupid stuff. And so I started just like, that doesn't have anything to do with it. And we had to keep making sure that her Zoom was on mute. We thought it would be a good setting that Zoom wouldn't allow you to unmute yourself accidentally unless you put in a pin or something. So anyway, you don't need to worry about accidentally unmuting yourself. We've got that set. But we do encourage questions. So if you'll hover over your Zoom window, there will be an icon at the bottom. There's one for chat, and there's one that's a Q&A. We prefer that you put your questions in the Q&A, and there will be 4 of us monitoring those. So please ask your questions. For CPE credit, we have to monitor your attendance. We're supposed to do 3 check-ins per hour. You have to get 2 out of the 3 check-ins to get full credit. We have not had problems with anybody getting their full credit. So the way we do this is with pop-up polls. I'm going to launch one right now. So if you do not see the pop-up poll, sometimes it hides behind your Zoom window. If you're viewing full screen, it'll hide behind it. Sometimes some systems just block it. You can, again, hover over your Zoom window and there will be a poll icon if there is an icon or if there is a poll going on. So you can click on that and it'll bring it up. And if all else fails, every time we launch an attendance poll, I will put a comment in the chat. So if you don't see it, just type here, don't worry about it, and we will get your CPE to you. I think our schedule today is we're going to do 100 minutes and then a 10-minute break and then another 100 minutes, and that will get you your 4 CPE credit hours per NASBA's rules. And CPE certificates will be emailed to you in a day or maybe 2. And I believe that's all you need to hear from me, and I'll turn it over to Les and Ari.
Thanks, Kathy. We welcome you all today. It looks like, we just had a ton come in at in the last few minutes here, Kathy. So if you just jumped in, you might not have heard the conversation about the polling. We have a poll going on right now. So I guess, is this an official poll, Kathy? Is this one of these you're counting right now?
It counts.
Okay. So if you just came in, there were about 20 people that came in. You want to hover over the Zoom window and click on the poll icon if there's an active poll going on. Now, we do leave the polls open for a while. So sometimes it's over 5 or more minutes. The only thing we are not allowed to do, Grace, is so you don't see the poll icon. It should have been right next to Q&A and between Q&A and chat. Is that where it is, Kathy, for them? I don't know if my screen's different, but
It should be, but depending on where, I don't know, some systems just don't show it. So if you don't see it, don't worry about it. Just comment here in the chat and we'll get you taken care of.
and Grace, so that's your answer. If you do not see the poll, um, Kathy does post inside the chat window when the polls happen. So she didn't do that for the first one here, but she does always when the polls are ongoing inside the class itself. She will put the poll up and then turn around and post in the chat. Um, uh, and then you'll be able to see either way. You could, people ask us, well, if I put no on the poll, do I still get my credit? Yeah, if you answer the poll at all, you get credit. We don't care whether you put yes or no, but you answer it. And if you answer in the chat, Kathy does go through and make sure the people have marked or have been commenting in the chat. And as Kathy said, we do keep everybody muted. However, that is not a process where we're trying to keep people from commenting. If you do want to talk, you can just raise your hand or enter it in the chat, and Kathy or Michelle can, or even I guess me. I'm usually just distracted, so but we can let you speak if you want, and then you would come mute yourself again. So anyway.
Yeah, comment in the chat because I turned off the raise hand feature.
Oh, the raise hand is turned
Because
off
most
now?
people only accidentally raise their hand. So and then when I ask them about it, they are flummoxed about what I'm talking about.
Well, we want to welcome you to one of our. It's kind of a new deal today, and we're pairing with Ari Rubenfeld of Urban Wise Consulting, and I'm going to let him introduce himself in a second here. And I did not put. I don't know why. Usually with auditors, I'm well known. Ari's not, and I just thought I didn't even think about putting an introduction or a background onto this for the speakers. So Ari, do you want to go ahead and just introduce yourself?
Yeah, thank you, Les. My name is Ari Rubenfeld. I'm from New Jersey. So I got my experience from the affordable housing comes from the management side. So I've been doing this for over 10 years, doing the compliance, overseeing the compliance for several thousand units, overseeing the property managers and the at the corporate level, but also very hands-on at the site level. Been doing this for a long time, and I'm excited to share what I can with you all.
Okay, Matt, are you talking about everybody, me, or Ari, or everyone?
Oh,
okay.
All right. I'm going to move a little closer to the mic. Is this better? All right. Thank you. Sorry.
Perfect. Okay.
Nobody ever asks Celeste to speak up.
Yeah. Well, you can see I'm wearing a lav mic, and I'm the least quiet person Kathy knows.
There's also a request in the chat, which we might need to do after the class. I don't know. But Emily, we will get you taken care of, asking about including tenant file forms in the materials folder.
Now, Emily, just a little for everybody else. Here's how this is going to work. We have this in 2 8-hour days or 2 4-hour days spread apart. If we sponsor our own training, we keep it to 4 hours. It's just too painful to sit 8 hours. Private classes will do 8 hours, and I think we're just killing everybody slowly. If COVID doesn't get you, Zoom will. But this day is going to be a little more general in nature. A lot of the forms, the background, systems, a lot of explanations for how all that works. So when we move into the second day, we'll be real deeper into the occupancy guide itself. But there are plenty of forms that will be out today. Ari has put a couple in. I've put some stuff in. At the end of the day, Ari is not really tuned into the audit guide per se, but we'll address the audit guide probably in the next session is when we'll get to that. And the forms and things that are needed, most of that will have been identified before we ever get to the audit guide. And whatever you need, we're going to be able to provide. I think we're a little, this is our first time, and Ari and I haven't spoken together yet. This is the first, so I shouldn't say that out loud. I just wanted to make sure you know this might be a little less, it might be a little more unstructured as we learn to work together and do this. This is our first presentation. Okay, now I'm going to share my screen and we'll get going. I think that takes care of most of our housekeeping issues. We will, as I get to a lot of this. I think that we're trying to use Ari here today to lend a little more practical perspective to the tenant file process as opposed to just looking at it. As auditors, we're pretty good at this. I'm not lying, I don't think I'm overstating the truth when I say, look, we understand how to audit most of this to some extent, but there's a difference when you get down into operating, and we want to make sure that we are, Kathy, oh, sorry, it wasn't sharing yet. There, my. Okay, so why are we here today? This is our agenda. Now, this is probably what you see on this agenda, page 2. We're going to get through that and the beginning of page 3. Slide 3 here coming up. So we're going to just discuss, the overview of the subsidy process, the history, what the HUD guidance is. We're going to talk about HAP contracts, the renewal contracts, the handbooks that are relevant, HUD systems, in particular tracks and EIV. Ari will go into any amount of detail we need to discuss software interfaces between a rental package, and he's familiar with 3 or 4 of them. He's implementing one right now at another client, a new one, I guess. Redmond, is that what it was, Ari? Redmond?
Resman, R-E-S-M-A-N.
Resman, okay, Resman. Oh, I couldn't remember.
These are great, but I'm not recommending anything specific here. So,
well, no, it's just that we really wanted to get into the conversation about what the software does, because Section 8 housing is a software-driven program, isn't it?
Yes, absolutely.
Most of the things you rely on to keep you on the straight and narrow, keep the things moving the way they do, are driven by controls within the software that the client buys.
Yeah, and even your interaction with HUD, with the HUD systems, Tracks is 100% through the software. So
it's all 100%. In fact, Tracks is only a reporting system anyway, isn't it? For most of us, it's just reports.
They can send you messages back, but even those, you access to the software, and everything is through the software. That's key.
And then, of course, we'll discuss EIV. There is a move afoot, and I don't know how Ari feels about this. We have not had that conversation about the latest housing notice on electronic signatures, and does that actually remove the restriction from EIV being utilized on a remote basis by an auditor? I think it moves a long way there. It's not as specific as people want it, but it didn't say except for EIV.
Right.
So, and it does look like the majority of the people here today are auditors. We got 14% with management. And now on to the next slide, key documents. Here's where we'll get into a lot of this. Now, if you're talking, Emily, about the key documents, I can tell you that the lease and the addenda, and the tenant selection plan. I don't know why I'm having trouble there. And all these other policies, these are key internal control documents that state the process for why things are the way they are. Okay? And the client is required to follow those. So the existence of those documents represents a potential control because it is a plan. It is a guideline. HUD approves them. They have to do this. And of course, we're testing that in the HUD audit guide. Up in fair housing, it needs to be moved down to tenant files. But and that's the thing, Ari. I don't think, Ari, have you paid attention to the HUD audit guide, chapter 3 before?
I have not, no.
Yeah, I know Joe does there. So.
Yeah.
Okay, then day 2 will probably, or part 2, I guess this is the way to say it, part B, will be more the rental process, the application, real details about the nuts and bolts, the if, thens, and other things, where we'll get into that, rental process and talk about, how you get on the wait list, how do you do this, how do you get income calculated, when do you do a recertification, what does the recertification require? We'll have all those probably on part B, including the HUD audit guide testing strategies and uniform guidance. Oh, that's already a mistake. Section 8 cluster. So why are we here today? Well, the history of the Section 8 program comes under Section 8 of the Housing Act of 1937. There are really 2 flavors of Section 8. If you really look at subsidy, there are 2 subsidy programs. There is Section 9 and there is Section 8. Section 9 is public housing. So nobody, if you're in HUD, in the program office, you will know Section 9. They will refer to it as Section 9 because public housing has a multiple definitional thing. I am the public housing authority, and that authority may run a public housing program and it may run a Section 8 program. Now, the Section 8 program is 2 types of assistance, obviously. You get PBRA, project-based rental assistance. That is what we would know as multifamily Section 8, and you get tenant vouchers. Now, there is a move afoot by HUD to get more tenant-based vouchers. Okay, Emily. We'll continue that conversation. Okay. So when you look at the Section 8, many of you will have tenant vouchers in your projects anyway. And the Housing Authority is doing the compliance. They're checking the eligibility. They're recertifying all that every year. They're responsible for having an inspection. So they'll do that. But now they're moving into a little bit more of a project-based voucher where the voucher doesn't follow the tenant, because on a tenant-based voucher, the tenant can move anywhere that an owner will take a voucher and they're just, paying the rent. The voucher just pays the rent wherever they live. So the tenant is very mobile. And that was an excellent idea to get us out of kind of the program, kind of a little bit of the public housing problem, because you were concentrating people into a location where you were concentrating poverty or lower income folks, and the view was to really spread it out a little bit more at the project level. Now the components, if you look at 2020, PBRA, 021 billion dollars, and that is a $506 million increase. That does not include the extra billion for CARES Act subsidy, which we can talk about a little later. Now the voucher is obviously almost twice as big, but the voucher program has a problem. When you look at multifamily PBRA, what you do is you get a subsidy, and that subsidy pays for the tenant's rent, and there is no other money exchanging hands anywhere. When you go to public housing, they pay a HAP payment for the assistance, for tenant assistance, and they pay a admin fee to the housing authority to run the voucher program. Now, the voucher program has been known to have more or higher, I don't know how to quite say this, a higher administrative cost because you get paid specifically to administer it. In Section 8, you just get rent, and the rent has to pay for all of the operating expenses of the project. And so Congress has realized that the tenant-based voucher systems ran by PHAs is a little more, what's the word, I guess we would say, maybe wasteful, I guess. And so now they fund them on their admin fees are always prorated. So if a normal admin fee is going to be $100,000, it's really low. They might prorate them at 85%. And so they're only going to give them 85% of their admin fee. And the housing authorities complain like crazy and say, well, if you'd fund me at my correct limit, I'd be okay. Well, and the point Congress wants to make is we're never going to fund you at that limit because you're wasteful. You have too many benefits. You have too much this, too much that. Anyway, the costs are increasing primarily just due to rental housing going up. Ari, what are rents in the New Jersey area right now?
I mean, obviously, it depends on where in New Jersey, but, further north, closer to the city, very, very healthy rents, $2,000 and more, for nothing that's, particularly nice to live in. So, they're pretty high.
Okay. If that's the case, you can see why the program takes more money to survive because rents go up. And that's the other issue now with the $1 billion on CARES Act is that more and more people are out of work and going in for recertifications and increasing the HUD subsidy and decreasing the total tenant payment. And HUD's worried that we will go over our limits. Okay, so they allocated another $800 million into that program this year, beyond what they budgeted for, in what they actually put in the budget. Now, there are quite a few program reforms for this. My personal best, well, I can tell you, voucher is under a lot of reform, and it's basically just cutting back the admin fee. So we're just not letting them have all the admin fee they want. We can't really do much about the cost of the voucher because it's rent. We only pay the voucher at the level that rent is indicated plus the tenant portion. However, the one I'm most familiar with was the rental housing integrity improvement process. Now that's going to have quite an impact on our conversations really later today. One of the things that happened out of the rental housing integrity process, improvement process, was tracks. Oh, sorry, I'm looking at the Q&A. Okay, it's more for Kathy. Okay. What we found is that we were overpaying sometimes over 50%. So if Section 8 was spending, $6 billion, they found out they probably were overspending that by 40%. And it just got beyond belief. So people weren't following the rules. And so tracks came on. And we'll talk about tracks as part of that. Oh, Ari, did you hear that? Oh, he's going to reach out later. Okay. We So we integrated tracks, and the next theory out of that was, look, we've tried to work down all the kinks where the management agent would kind of have a problem. And what we find is we've really drilled down about as hard as we can get there. So the next step was to catch more of the errors that were coming from the tenant, and therefore we implemented EIV. And those are some of the reforms that have been ongoing throughout this process that really just have made a difference, I think, in how the systems work. They've added more control, the ability to catch. Ari, yeah, do you have a lot of clients who have receivables for, I guess we call them in public housing, we call it fraud, but back rent due to EIV challenges to their income numbers?
Yeah, well, we have it all the time, and HUD was actually, threw a lifeline out to a lot of the owners and managers, and that kind of complicated things. If you run an EIV report or you discover fraud, and this could be going back 2 years. We had a client recently that found the tenant owned a house out of the country and was earning income on that for several years. So in the past, you had to go ahead and go back 2 years, give HUD back all that money, and then the owner was kind of on the hook for it, and you hope that the tenant would pay you the money that he owes you. HUD implemented the repayment agreement program, which I'm sure you know about.
Mm-hmm.
Kind of allowed HUD gave you the money back up front, and then allowed the tenant to pay the money back to HUD. So in a weird way, this actually kind of increased the incentive, or took away the incentive of the owners to be that concerned about fraud, because hey, they get the money back anyways from HUD, and it doesn't matter. The tenants don't mind doing the fraud because they'll pay HUD back a couple of bucks a month for 20 years. So we're definitely seeing an increase, and the repayment agreement has been one area where HUD is really focused on, because they realize that it's costing them a lot of money, and there's implementing all sorts of changes about the way those are reported and the way those are monitored, and what happens when the tenant moves out, who tracks to make sure that he's still going to pay HUD the money he owes. But there's definitely been a huge increase in that area.
Ari, when we look at those, do we put those on our receivables?
So, well, the way it works is HUD gives you the money up front, and then the tenant kind of owes the money to HUD. So we put it on once HUD gives us that lump sum, it comes in as part of the voucher, and that's part of the receivables.
Okay, so many clients are carrying an extra receivable balance due to repayment agreements.
Yeah.
Okay, and do they end up being material at all by your standards? Would they be somewhat material? Because we don't see that many receivables in multifamily housing, even in Section 8. So I was just curious about that. Most of our balances until this year have been small. Now this year's a whole other story, but
it could be significant, depending on the building. You try to avoid this. You try to make sure the tenants report things honestly and do things right, that you catch it. But it can be, depending on different regions, different types of buildings. It could be quite significant. The one thing that HUD does is, when the tenant pays the money back, they allow you, the manager, to keep like up to 20% in collection fees. So it gives you a kind of incentive to recoup that money for HUD.
Yeah, and the voucher program for PHA, they allow them to keep 50%
Wow.
of the recovery, and the other 50% goes to HUD. So multifamily gets kind of taken advantage of. Anyway, for a little background now, let's just get into a couple of things. So this, from 37 to 65, you really had public housing and a subsidized mortgage were the primary backbones of federal housing assistance. The mortgages are coming through FHA, and of course the public housing issue was being driven through another department. There was no HUD. But as you really move more into ownership, clients or public housing authorities didn't exist, so the federal government owned these housing authorities. From Carrie, oh, so is my understanding correct? HUD repays owner for rent. Tenant needs to pay HUD, but the manager reports the AR. Why does management have it on their books? Because the AR really goes to HUD. The ARs from the tenant that would come in and offset the voucher, right, Ari?
So again, I'm maybe I'm a little confused because I'm not involved in the auditing side. HUD, let's say we go back 1 year's worth, and it turns out that the tenant received $10,000 too much from HUD. You got to give that $10,000 back to HUD, and now the tenant owes you the money. What HUD allows you to do is HUD will give you those $10,000 back. So now that money is yours. That's yours. And now the tenant pays the money directly to HUD. Well, through the voucher, but pays the money to HUD. So just to clarify, is that?
Well, I think what she's saying is, why does management have an AR on their books from the tenant?
Well, okay, I was referring to that initial payback that HUD gives. That's what I was referring to. Yeah, but the money that the tenant pays is now going directly to HUD. I guess there's a balance on the tenant's ledger, which then ends up going directly to HUD.
So has she said, Carrie's going, I think it's a she, I have no idea, sorry, this gender thing these days. They want to know, is that a pass through to HUD? And we clearly HUD's getting the money, but do we book that receivable in our general ledger? Is it, if I look at your receivable balance, does it contain people who owe money back to HUD for
okay,
the amounts they owe HUD?
I'm sorry. I thought you were referring to the money that was no. So that sits on the tenant's ledger, and then that just passes right through to HUD. I apologize.
Okay, so it's on the tenant ledger, and I think that's important to recognize. It is in receivables per se, but it's not going back, or the money is not being received by the project. It's just being tracked in the tenant receivable, but it does not transmit over to the general ledger on a receivable balance.
Right. Yeah. I apologize. Yes.
Okay.
Still brushing up on my auditing language.
Well, we'll try to clarify. Okay.
Maybe you auditors are the enemy, so this is kind of unholy alliance here.
We are the enemy, huh? Well, this is why I thought it was important to have somebody deep in the trenches discuss this material. So anyway, when you really looked at what was happening with brick and mortar, the government just doesn't want to get involved with owning a building. They're terribly inefficient. I mean, if you look at the IRS, I mean, I can't imagine why we wanted to give them our health care, all these other things, where they don't really, they're not nimble enough to make good decisions, quickly make choices, get people in and out, establish policies. There's a lot of hand-wringing. And even now, HUD is tired of having a responsibility to brick and mortar. So in public housing, we're on a move right now to convert all the public housing that we can out of the program and move it into a Section 8 contract. We call that RAD. Oh, by the way, there's a lot of conversation. I think you'll see a lot of conversation today with Ari and myself. You will have access to this recording, okay? So the materials, we'll have them in a folder, but you will have access to the recording if that's something you would like to have. I don't know, how do we send that out, Kathy?
After I send out the CPE certificates, I follow it up with an email to let everybody know their CPE certificates have been sent and remind them of the materials link for the folder. And I give them the link to the recording, which I have on YouTube. And there is also a question in the Q&A about what is RAD, and I'm going to upload the HUD acronym list to the folder in just a minute.
That's probably good too. We're going to have a lot of acronyms. RAD stands for Rental Assistance Demonstration Program, and it's the move where HUD starts getting out of the real estate business and moves all of those persons who are in public housing or Section 202 with a PRAC, any of those things, they're where you're tied to real estate, they're getting rid of the real estate liabilities and moving it over completely to a Section 8 contract of some sort. It can either be project based or it can be, well, they're both project based, but one's a voucher and one is multifamily or PBRA. So project based rental assistance, the other is a project based voucher. PBV or PBRA. So RAD is a program that Congress authorized to help rid HUD of the liabilities, and I don't mean the actual, liability side. It's the liability for maintaining the building from an appropriation standpoint. So if you're in public housing, you have capital fund, and the buildings there's not enough capital fund to keep the buildings in shape. Well, why do you need that? Ari doesn't get a capital fund and his buildings are not in bad shape. And HUD's recognizing that and saying, well, let's just turn you over to a subsidized program. The tenants get their subsidy and HUD's no longer on the hook. It's kind of like this, Nate. If you had a factory job 20 years ago or 30 years ago, you had a defined benefit pension plan when you retired. And HUD was the employer of the plan was on the hook to fund that through the rest of your life. But when we began to record those liabilities on our books, we converted it all over to a defined contribution plan, and we gave you money and said, now leave us alone. We have no further responsibility for you. That's what HUD is doing with RAD. So it's called Rental Assistance Demonstration Program, and it's moving them out of the real estate business and converting all the projects, even, like I said, down to a Section 202 PRAC, the Capital Advance Program, or public housing. Public housing is the biggest, but there's a lot of Section 202. And we're going to convert those over to Section 8 programs exclusively and rid ourselves of the idea of buildings being HUD's responsibility and tracking it for 40 years and doing all this.
Les, to your point, one of the biggest challenges that we've had in conversations with public housing authorities is, we're talking about a RAD conversion. Well, what are we going to do with our staff? We have, a couple of buildings with 11 full-time staff members, and they want to make sure that, that those jobs will be taken care of, which just, it's a complicated issue, but that just speaks to the point that there's a lot of fat that HUD wants to trim from their liability.
There is a lot of fat. In fact, Ari, on those buildings, whether you have 11, how many would you put in there on your own?
We actually met with them, not more than 3.
3.
Yeah, it was a little over 200 units in the New York Housing Authority. Small, it was a joke.
Does that include maintenance?
Yeah, that includes maintenance.
So the 11 had maintenance and everything, and you're going to put 3. So you probably have an admin person and 2 maintenance people.
Exactly. Yeah. And maintenance, maybe an assistant. So 3 or 4, but yeah.
Okay, 3 to 4 FTEs. Okay, that just tells you kind of what's going on with this. And so when we get to the background, you get out of that, and we started the Section 23 program that allowed residents to move to leased housing. Then we went into this experimental housing allowance program in 70, and they began to look at the demand for that. So they had the 3 experiments that I've never even really paid attention to this. They had a demand experiment. How many people would be interested in utilizing that kind of housing? How many landlords would participate in the program, and how hard would it be to administer it? And lo and behold, wouldn't you find out that everything was positive? So we moved over to Section 8. Now, Section 8 has a flavor. New construction, substantial rehab. There were existing certificates. Most of those are highlighted in the Section 8 cluster we have in the uniform guidance area now. So, but most people, we're required to report the CFDA numbers. And there's a group of 4 CFDA numbers for Section 8, for multifamily Section 8. Some of it's new construction, some of it is the sub-rehab. But mostly we see reported under 14195. I don't think, Ari, that you pay that much attention to those differences anymore. Aren't the programs pretty much consistent now?
Pretty much, there are little differences here and there that, if you're in one of those kind of, unique ones, you just want to be aware of. But otherwise, you kind of look at it all the same. Section 8 is kind of all the same.
And even a prac. Do you guys do any pracs?
A little bit, not too many.
Okay. But they're pretty much similar anyway. I would think anything that you see with subsidy, it's going to follow the occupancy guide, and it's going to be really all 95% the same, isn't it?
And like we said, the software, which we'll talk about a little bit later, usually will account for all those minor differences.
Yeah.
And you have to pay attention to it.
The programming's good. Okay, now subsidies initially were to pay no more than 25% of their income for rent. Obviously, with rent going up, we've increased that to 30%, and that's basically what it is to this day. And so when you look at PBRA today, when we look at project-based assistance, that's about 1.3 million households. That is over the number of households that was in public housing. Public housing had 1.2 million households. Now, 30% of their income, and of course you know that 40% of all units leased or offered had to go to ELI tenants, which means they were 30% of the median income. So they were extremely low income. 30% is ELI, and that means extremely low income tenants. So we're really targeting those individuals in a Section 8 contract. Now, that's actually Section 8. The PRAC or some of these others might not, they wouldn't require the same targeting because they're really dealing with seniors or developmentally disabled or something else. Okay, you get a HAP payment, which is just the difference between the contract rent that is set and the tenant payment that's calculated. And the software is nobody's ever going to sit down and calculate all these rents. They're just going to go into the software. And it's going to happen that way. In fact, in and Ari, you guys don't really have access to program code to change things, do you? You just buy off the shelf and they do some customization for you or whatever, yeah. But you don't have access to source code.
No, there's a lot of customization, but whatever they have. You can't, you can put in a request. Sometimes I'll do something special for you, but otherwise you're buying it off the shelf.
Okay, so my point behind that is that systems are the very fact that the tenant or the tenant management software, I don't know what you call it, is in itself a fairly significant control point that doesn't allow them to make too many changes. So contracts are really tried to be comparable to rents. You can do rent comparability studies, but I would say now, Ari, aren't most people converting to the OCAF adjustments?
So, the OCAF adjustment is kind of across the board as of right, and everyone gets it. But then you have your every 5 years or upon contract renewal where many contracts, not all, have the ability to go up to market. You can do a rent comp study and you can take it up. I mean, we've done some really great work with some of our clients in New York City, before, everything kind of started falling apart last year. So for a great many contracts, besides for the OCAF every year, every 5 years, you're obligated to do a rent comp study. And then based on that rent comp study, you can go up to market, or sometimes actually you can go down to market if the rent comp study gives you comps that are lower. So OCAF.
I'm curious, does that even work for one of these 20-year OCAF contracts?
Yeah. Most of them require every 5 years to do a rent comp study regardless. And you got to make sure that your appraiser, independent appraiser, but we had a property which the rent comp study came down and was going to lower our rents by like $50 a month. And so, we spoke to different people. We added a computer room. We added a couple of little amenities, which allowed us to keep our rent, steady. But most properties, every 5 years, even if there's not a contract renewal, we'll be able to go up to market. Not all of them. There could be demo projects, mark to market. A lot of nonprofits have these they're locked in and they're just restricted at OCAF for the duration of the contract or the use agreement. But a great many of them now, you can see tremendous shifts every 5 years.
Okay, well, that's the number one comment we hear on RAD for the 202 program is it's revenue neutral, so it's really difficult to get those contracts up somewhere to market rent, and that's the biggest problem. Okay, so when contracts expire, you can renew or convert units to market rate, which means take them out. Let me say this about that process. HUD is absolutely terrified of losing affordable units. In public housing, you got a 1.2 million affordable units, but that affordable housing was tied to public housing, and the buildings might be bad. And if you let the building suffer, then you would lose the associated subsidy. So they want to move that out and keep the subsidy. So everybody knows there's a tremendous backlog or need for affordable housing. And of course, HUD has not created new HAP contracts in quite a while. Okay, so the RAD program is really not creating new HAP contracts per se. It's replacing other contracts that they had with Section 8 contracts. So they're replacing one subsidy with another, but not new subsidy. Okay, so if we look at this, the contracts are generally administered by a contract administrator.
Well, just to that point, if you want to opt out of a contract, and I have seen clients, think about it for one reason or another, but since nowadays you can go up to market, there's very little reason to. But if you want to, they make you jump through hoops. A year before you had to have sent out a notice to the tenants and very specific guidelines, and they're really discouraging it. If you do opt out, then they're going to be obligated to give each of your current residents an enhanced voucher that they can take anywhere, which they really don't want to do. So, they make it hard for you.
And generally in the market today, we've seen the value of HAP contract projects go up because you're sitting here with 80 to 90%, up to 85% of the tenant rent paid by the government. Well, that's pretty hard to deal with, right?
Think about, during COVID, people lost jobs, that was okay because HUD just kicked in, the difference. So really, these deals are really hard to get. So they're very, very valuable.
Okay, Ari, do you want to go over a HAP contract right now? Do you have one, or should we use the one I have?
Yeah, well, I think we have one shared. So if you want to just.
Oh, let me just get it. Let me share it up here. When I got to here, I wanted to, CPE. I wasn't sure which one we would use. I have one in there. You have a renewal contract?
Let's look at the renewal. The original is kind of, obsolete. There's no need to.
Actually, can I go to this renewal? By the way, I want to go to the original for a second for auditing purposes. Is that okay? Okay, as you can tell, Ari's going to be, he's very clear on this. That's a 39-year-old contract. Who cares, right? Now, from an auditing perspective, though, there are some things in this contract that will not get repeated at other times. Is this one you sent, Ari?
Yeah.
Okay. Now, one of the things I wanted to point out was just this right here. There is a max contract value that gets basically set every year. Like if you get a rent increase, how do they communicate that to you, Ari? Is there an email or something in tracks? How do they let you know what your contract value is for the year?
Well, every year you got a new rent schedule. Every year when at the OCAF time, you'll fill out a new rent schedule, and maybe for part two, I'll have one uploaded, and that will tell you your contract value right there.
Does that Okay, I thought that I have one here a little bit later, but for I didn't know it was telling me that my max contract value. That is
Well, in your contract, it will list it, and then annually your rent schedule will list the total annual amount.
max subsidy. Now the reason I'm bringing that up is this year CARES Act money kicked in $800 million, and that money went into your contract value. Nobody got the money. I mean, per se, did they, Ari?
Yeah, so we spoke about this last week. I reached out to, all of my contacts at HUD. They didn't even know what I was talking about. They didn't see that. That was, maybe at some accounting, software, they allocated more money to you, but that you don't see. I misunderstood your question. You don't see how much is specifically allocated to your contract. You'll know if there's a shortfall because your money won't come in and you'll have to kind of scramble. But you're not going to see how much they actually allocated. And so far, everyone I spoke to said there's no way to know whether or how much CARES Act kind of, allocated to your specific contracts.
Now, the other thing about these contracts, and I'm just going through this one. Ari, do you want to just quickly address the vacancy challenges? That's not really, this is more of a basic class, but if you could just describe the ability to charge for vacancies, kind of how that works.
Yeah, so that's the special claims program, and that's something which is HUD recognizes that filling in your units with affordable eligible residents can be difficult because obviously there's a high demand for these units, but there's all sorts of verifications and screening and all sorts of things that you need to do before you can move a tenant in. And so once the tenant moves out, you got to make that unit ready. So before the unit is ready to move in, before your maintenance guy signs his maintenance form that says this unit is ready to move in, you're not getting any money. But once your maintenance guy signs that letter that the unit is ready to move in, HUD will give you up to 80% of 2 months rent, for that unit. So, it takes you a month to move someone in, they'll give you 80% of that for that month. And that could be very valuable. So it kind of, offsets the cost of having, because, we've had, I cannot tell you how many times we've had people all ready to move in, and then last minute they back out, or last minute, something comes up and turns out they're not eligible. There's an additional child living with the family that, they didn't tell us. And then you got to start the process all over again. So it could be an extensive vacancy due to the HUD requirements. And so HUD says, we're going to pay you, some of that money. They're not paying you 100%. So, they want to incentivize you to move someone in as fast as possible. But we've seen clients really, really do well with this special claims vacancy program. And it's really beneficial.
And I think obviously it's not really an audit issue. However, what you see is you would record the special claims amounts separately. And Melanie, we can provide Ari's contact information at the end. Okay. So when you see that, we are looking for that to be recorded as a special claim revenue, and that gets reported to REAC separately.
Yeah,
okay?
and there's an additional special claim where for unpaid rent or vacancies, unpaid rent or damages, where the tenant moves out owing you rent. So even after you keep the security, which is usually not that much, or there's extensive damage to the unit, HUD will also give you some of that money, up to 1 month's subsidy amount. So that's a little bit more difficult because you kind of have to submit reports, and you have to kind of prove that if a tenant destroys your carpet, you have to kind of show how old is the carpet, because maybe the carpet was too old and it's not the tenant's fault. So there's an additional amount there, and that goes on the voucher as a separate charge, and it's it adds up.
Okay. Ari's kind of a specialist in special claims, by the way. So he
I love anytime you can get money, that was, pick up a little extra money that wasn't coming before makes me happy. I'm sorry.
Okay, now we get some requirements for maintenance and inspection. In this particular case, we end up, this is where we will get to our audit guide requirement on inspections. This is the move in and move out. Sorry, I cannot draw straight with my mouse. The owner and the family. Now, there are revised procedures for inspections right now given COVID. Sorry, I cannot use this mouse. And this is a big deal to us. People think work orders are sort of an inspection process or a maintenance function. They're really not. They're just responding to tenant complaints, although in many cases there is maintenance involved, like, you know, call your super, right? In New York, where I watch all these Seinfeld shows, call the super. But this is a different thing to say the unit is inspected, and we're going more online now. We're doing videos. That's a big change. And the maintenance is a requirement we don't really know how to look at. Now, this talked about their rent adjustment, how we market units. Of course, go ahead, Ari.
Two things. First of all, just to respond to Janice on the chat. Yeah, due to COVID, the special claims was adjusted, and now you can actually receive your special claims from the date that the previous tenant moved out. You don't have to wait till the unit is ready, because again, they recognize that due to COVID, it may take you time for the unit to get made ready. They want you to fill out an extra little, the extra form, and every contract administrator deals with that differently. In addition to your move in and move out inspection, which is kind of a little bit more objective, there is an annual inspection requirement. And I think at the top of the page, it actually listed in the original contract. HUD doesn't give you a form, but they do want you to go in there at least once a year. Right there, number 2, right? At least annually. And again, that's a requirement. They'll check for it on an MOR. It's also just very, very, if you're an owner manager, it makes sense. You're going to have a REAC coming. You want to access. You want to be able to see that unit more than just scrambling right before your 2-week notice to the REAC. But it's on a different form. So the move in, move out inspection, HUD has a form which they recommend you use. You don't have to. The annuals, you got to kind of track that on your own.
I wanted to add one comment for this in terms of auditing. In the management functions area, we talk about maintenance, and the main internal control over maintenance is the annual inspection. So we should be asking to see how the owner did their annual inspection. And this would be separate from the REAC inspection, which might only happen, if you're lucky, every 3 years, correct?
Yeah, I mean, especially now. I mean,
especially in COVID.
And
you're in the
by the way, you can do it more than annually. It's at least annually. We have owners that go in quarterly. We have owners, twice a year, depending on the batteries and smoke detectors. You may want to monitor that more than just once a year and stuff like that. So,
Ari, how many of your owners have a work order system that requires them to look at certain things on the work order that are separate from the purpose of the work order itself, but every time they enter the unit, they're required to review some things like dripping running water or whatever?
Almost all that, and most of your softwares allow you to customize that. So you want a checklist. They go in to change a light bulb. They're going to also check the smoke detectors, leak, gaskets, basic, pull cords and that kind of stuff. That's just good practices because, again, you cannot inspect 100% of your units before REAC for every little minor issue that comes up. So.
And I wanted people to know that so that when you're thinking about controls, things the client does, this is another one of those that is never highlighted in our audits of compliance, because especially if you're Section 8 and you have a major program tied to management functions, you'll get this same inspection requirement. How do you know the project is working to keep its maintenance up? Those are the places you go to look for that. Okay, now, failure to lease to eligible families. This one was a little different than mine. So that one, what do we know about this one right now, Ari? This one does not restrict distributions, does it?
No.
And I did have another one in here where the HAP contract was a restriction sorry, I'm gonna pull one up because I wanted to just have everybody get the flavors of how different these original documents could be, and then we'll let Ari do the renewal contract.
Yeah, and I don't know if you want to talk at all about the utility allowance
Oh, we could do that. Yeah, we'll talk about that then also. Redacted.
And just to answer Melanie over there in the chat, I'm actually signed up to, for the volunteer projects for the Inspire. I was officially approved, but I haven't heard anything. I got an email maybe 3 weeks ago about it. I don't know. I mean, REAC is it's been a yo-yo. It's been one heck of a ride, and I could keep everyone posted, through Les, but your guess is as good as mine.
Most of these contracts will all pretty much be the same, and it depends on the year they came out. I think I opened the wrong one here. This is the one. And depending on their timing, it really pays dividends to be able to read the contract. Now, the reason I wanted to come into this one, they all have vacancies. They all have a lot of the same things, maintenance. This one had financial submission requirements. So this one actually required a REAC audit. Now, the other one that Ari had there that we showed does not. And so if that was the original owner, they would still not have to file with REAC. Now, 90% of these original contracts or more have changed hands. And when they changed hands, HUD made, in the assumption documents, HUD made them take on the financial reporting requirements. So almost all HAP contracts have it now. But use of project funds, replacement reserves, and they limited the dividends. In this particular case, distributions may not exceed the following maximum returns. If you're an elderly family, the first year's distribution will be limited to 6% on equity, and it would be 6% on equity in the next years after that. Non-elderly families, the distribution will be limited to 10% of the equity the owner had in it, and they set those rates up front. Those are what we call limited dividend contracts, and most of the limited dividend, okay, Matt, you want to see a finance report, a statement? I'll bring that up. With everything going on with COVID, is REAC still anticipated to be due on 3/31? As far as we know, Grace, yes. Of course, we didn't actually, Kathy, we didn't extend. June wasn't extended out, was it?
No, it wasn't.
Yeah, so we only extended March. June was not extended, and we have to go into that. And I can bring up an example of the report here later, Matt. But my point is, this was a limited dividend contract. Now, owners have the ability to get out of limited dividend contracts at the renewals. Ari, have you ever been involved in that?
I haven't been involved during the process, but I've been involved with properties that had that process done. So
okay. And I have the Exhibit B in here. Most of the renewals, especially when you go to a 20-year HAP contract, we end up with Exhibit B. This is part of the renewal contract. And it comes out of this Section 8 renewal guide. I think that's what it's called, right? So if you were not subject to distribution limitations before, great. But if you were, you are then, if the project is subject to a limitation on distributions of project funds pursuant to a reg agreement or pursuant to an expiring contract, such limitations shall continue to be applicable. However, may take an increased distribution right here in accordance with the renewal guide. And that limited distribution is usually full surplus cash. I mean, the increased distribution. So HAP contracts, there are other HAP contracts right now that actually require you to return the money to HUD. And HUD suspended that for the COVID year. Okay? I don't know if you've had any of those, Ari. We still have a couple of those hanging out. That they have to offset their voucher by their residual receipts. But, okay, now Ari, you wanted to go to the renewal contract.
Oh, yeah, well, let me just throw in an additional important document, which we actually got blindsided a couple of times, and that's your use agreement. So, you know, for example, you know, right here on your contract, you talk about elderly families, non-elderly. You know, most contracts won't list whether the property is elderly or not. Of course, you know, HUD changed recently. Elderly now means elderly and disabled. So, you know, your use agreement is tied to the property, and that will list a lot of things that didn't make it into the contract. We've had owners that took over properties. The use agreement wasn't given over to them, and so they had no idea that there were certain limitations that were put in place. So you always want to reach out when you're buying a property or when you're doing, you know, your audits. Make sure, find out if there's a use agreement, and don't just take the, you know, the owner's word for it. You know, you can find out from HUD. They'll usually have that on record, or the contract administrator, because there could be requirements in there that, you know, you won't see in other places.
So it might be possible the owner is unaware of the use agreement.
Yeah, we absolutely, that has happened. You know.
Okay, now, if I'm an auditor, how would I go about, you said, you know, contacting HUD has not been all that productive.
Right.
So you said the contract administrator would have it?
The contract administrator should have it, or at least a record of it. So, you know, I guess if you're going to, you know, submit an audit and, you know, there's something there that goes against your use agreement, you know, that might get flagged. But I, you know, I couldn't tell you.
Okay. Well, let me go back to our materials here. And we had a renewal agreement. Where do you want me to go, Ari?
Yeah, so I mean, we could just stay right here for a second. Just scroll down and drop. I'm trying to pull it up on my end and share my screen, but I couldn't. Okay, first of all, right there, that checkbox right there, that's you know, that's an important checkbox. That tells you, you know.
If you want to pull it up, you can pull it up on your end and share the screen.
Well, Les, do you want to answer Matthew's questions? I mean, as far as the compliance, you know, I would think yes, but again, I don't know from an auditing perspective. That's mandated.
Matthew, to the extent that the use agreement is there, and I have not been as aware. This was a little bit of a revealment to me to hear him say that. Use agreements are in place for a lot of reasons, and usually we know about them. They're tied to specific populations, but also they could be generated by specific programs that existed previously, like a Section 236, a 202, where it's elderly. And yes, it should be collected for compliance procedures. At the worst, with the Yellow Book alone, okay? So if there is a use agreement, we generally always want to know and see the details of it. I don't know if it would fall under the testing of the HUD audit guide per se, but if it's a low income requirement or elderly housing, saying you got to put certain people in those units, and this is really tied to the land. So these are long-term things that make it very difficult to build condos out of the affordable housing unit. So now, if you want to pull that up, are you ready?
Yes,
I'll stop sharing and you can share.
Okay, here we go. All right, you see that?
Yes.
Okay. So again, this is a specific contract is a mark up to market. Let me get my my tools for annotating. Sorry, should have been better prepared. All right, so we have here. This is a Okay, that's not great, but we'll do it for now. This is a mark up to market. That means that a rent come study was done and they brought the rent, the rent up to a market rent. Let me get out of here. Okay. Oh, you see, I did that wrong. I'm sorry. Okay. I'm sorry about this, everyone. Okay, now this is going to tell you this check, if this is a 236, if this is, has some other limitation. Other contracts will list here if it's, eligible for markup to market, not eligible. So, if you want to kind of know a little bit more about the nature of the renewal, this front page will give you everything. And we left some identifying information on here. So I'm just going to go through it quickly. Here you'll see, obviously, the amount of time. This is a 20-year. Okay, it's a 20-year. Now your renewal here, this is important about how you can renew. And again, a lot of it is the same as the original, just spread out and it looks a little bit more modern. What you have here, again, this is your initial contract rent, which is, at closing, and then your OCAF. So OCAF, we spoke about earlier, every year, this is as of right for almost every single HUD subsidized property. OCAF is the operating cost adjustment factor, and this varies by state. It tends to be between 1% and 3%. And there's a worksheet which has to be filled out. Some contract administrators will fill it out for you and have you just sign a new rent schedule. Other times, I know like in New Jersey, they make you do all the hard work for yourself, New Jersey Housing Multifamily Association. And what the OCAF does, and this is probably worth mentioning, because I've dealt with some of the auditors here less, some of Joe's guys, and this is something that they didn't all know, is that when the rent changes, it's going to change for every single unit in the property at the same time. So if your OCAF date is November 1st, so November 1st, every single resident is going to have their subsidy increase. Now only their subsidy, because again, HUD is increasing the gross rent. Tenants are only paying 30% of their income, so that doesn't change, but HUD is now going to change the gross rent. So every single tenant is now going to have a gross rent certification. This is similar to a 5.9. It looks identical. All it does though is change the gross rent. And so when you're looking through tenant files, there should be, besides for the annual, there should be a gross rent certification for every single tenant at least once a year. Not at least once a year, once a year. In a case where the tenant's rent changes, and we'll talk about how that could happen, the gross rent certification needs to be signed by the tenant. And so that's something else that you'd, I guess, be checking for. The place where you would have the tenant's rent change is if there was a change in the utility allowance. And so if that utility allowance went up, now the tenant's rent is going down. If the utility allowance went down, the tenant's rent is of course going up. You need to give them 30-day notice. But in either event, they have to sign that gross rent certification. And again, we could talk about that maybe more tomorrow, Les, but that's an important piece over there.
Okay.
Was that a little too fast, too much, or?
Well, not for me, but
Okay.
no. Well, for what we're trying to do, I think that is about what we want to do. So let me just say this though. I'm going to bring up a rent schedule. And I want to get the feedback from it. I'm gonna add this into the materials. And I figured we would just have, since this is our first time, we'd just have to go through here and wend our way through what we want to talk about. It's going to be, like I said, a little more free-flowing. Rent schedule. I think I have this redacted, although I don't think there's anything really all that sensitive in any of these things. So I'm going to go back to share, and that will stop your share. And then I'll let you just comment here, Ari. Okay, there's the rent schedule. And apparently we have some non-Section 8 and we have some commercial space actually too. T-Mobile's down there renting a little kiosk space or something. So we had a lot of Section 8 and non-Section 8 units. It's not insured. And you're telling me that when I look at this, when I look at this, it tells me my monthly contract rent potential, $75,000. Isn't that my gross potential rent, Ari?
Yeah, I misunderstood your question before, and again, I apologize. It doesn't say how much is allocated. That just says the maximum. Now they're supposed to, and their accounting have, be able to cover in the eventuality they would have to pay close to that amount, but obviously, realistically, they don't. And so, the only place I was able to find a little bit, where you can see how much is allocated to you, was if you take advantage of the Resident Service Coordinator program. And so if anyone's familiar with that, there's an ELOX, electronic system where you have to submit requests and all that stuff. In there, sometimes you'll actually see, how much is allocated to your property. And I guess, you can go in there and see if CARES brought that number up, but, I don't know how accurate that is.
Okay.
So I apologize again.
That's what I wanted to clarify, because I've been trying to find out if we spent COVID money,
Right.
and for that. So now I'm going to get rid of a couple of these Q&As. Grace, I think right now for 331, I think we still anticipate REACT to be on time. Kathy and I have had a lot of conversations with Scott Loveday, and they are not anxious to grant another extension. They didn't grant it in June, and unless something really wacky happens, I don't anticipate them, we do not anticipate them granting an extension for the financial statements in March or December year ends anyway, either. And if you look at some of the other things for COVID, we've only granted some exceptions for Ari's recertifications, which we'll talk about on day 2. That's only for a limited period of time, so they're expecting everybody to be back on a normal schedule now, aren't they, Ari? Essentially getting your research done and things like that.
Yeah, and catching up.
Yeah. And then Matthew, I'll get back to the statements. Okay, so we had a lot of HAP contracts, and you have to read the contracts. The renewal contracts matter. Some of them can reset distributions. Some require residual receipts. Some require offsets to residual receipts. Some require distribution limitations. You have to pay attention to that. Now, tenant selection is the responsibility of the owner. The owner has to screen. They have to go through the process, and they meet to make sure or ensure the tenant meets the eligibility criteria in the program. And of course, we're limited to either citizens or non-citizens who meet that eligible immigration status. And Ari, you have quite a bit of screening for that, don't you? Aren't there systems for that you utilize?
The SAVE system, SAVE, SAVE system. You got to register with that. Again, if it's a U.S. citizen, obviously they bring in, documentation, birth certificate, passport, and stuff like that. That works. For eligible non-citizens, you have to go through the SAVE system, and I guess and that should be reflected in the tenant files as well.
Okay. And that's usually listed also in the tenant selection plan, isn't it?
Yeah, absolutely. Yeah, they check for that. Yeah.
Now we'll get to the tenant selection plan in a minute. Of course, there is no discrimination. And we're just talking about the general idea of what's going on. So we have to lease to eligible families. You've already had a discussion on maintenance of the project, and that really focuses on inspection. When you marry that with a HUD mortgage, you have a lot more responsibilities even then, because the building is collateral for the loan. And of course, they're looking for all of the discrimination issues right now. Fair housing is a still pretty large hot button, is it not, Ari?
Yeah,
Ari?
absolutely.
Okay, then you have all the reporting requirements, and then of course the HAP contract requires HUD approval to transfer it. You cannot just assume a HAP contract. You have to be approved. There's a series of requirements. There's an assumption document that goes along with that.
And that process is getting more difficult by the minute.
The assumption process?
Yeah. I mean, it used to be, if there was no HUD loan, then you can kind of just, just make sure you let HUD know and you're good. But now, I mean, you have to give yourself a couple of months in the very least. And, there's the 2530 process, the previous participation, and they want capital needs assessments. They want to see, they want to see that you have HUD experience. They want to see financial statements and all that. So that's become a bigger and bigger deal as the years have gone by. So just keep that in mind.
Okay. Now, I'm not going to look at the lease right now. Well, I guess we could. The lease term's really about 1 year. It basically automatically renews, but it's a 1 year period of time. And the reason for this kind of a thing is HUD used to actually appropriate multiple years worth of money. So you might have a 20-year HAP contract. They would appropriate all 20 years worth of dollars in that year's appropriation. They don't do that. So every year now gets a separate Section 8 of appropriation, and the leases run 1 year. We are looking at how that will be treated under the new leasing standards, and I don't think we're too worried about that because they really are. The conversation came up about whether they would be renewed or not, or what's the likelihood, and all of those things. But even still, we think we're going to be outside the lease requirements and keep these on short-term leases. Okay.
So, let me ask you a question, Les, and this will, I guess, also address Matthew. When you audit, do you actually look for lease renewals, or does the 5.9 annual recertification, does that work?
The 5.9 usually, well, I guess here's the thing. If you come in and recert, does the tenant sign a new lease?
So I'll tell you that in most cases they don't, because other than the first year, your lease doesn't matter. Your annual recertification binds you to the terms of that original lease. And so the only times that we'll sign leases is if the bank wants it, and they'll say, hey, we want to see leases. They're not familiar with the annual recertification process, and so we'll go scramble and we'll have everyone sign a lease. But we don't pay, other than the original lease, which is obviously required, the Section 8 model lease. We don't really care that much for leases. The annual recertification is what's important, and that's a 1 year at a time deal, Matthew. And if they don't sign, then they lose subsidy. So there's no automatic when it comes to the annual.
And he said something there that I wanted to think about on this. I'm trying to phrase this correctly, get my thoughts in a proper order. The 5.9. We have never had on our checklist, nor do I believe it's required to actually, the HUD audit guide may ask us to look at the lease, but I'm with Ari in years 2, whatever. The only thing I'm worried about on the lease, frankly, is that I don't have the proper addendums when the MOR shows up. So I haven't added a VAWA addendum, or I don't have the senior housing addendum that says they allow pets, at least, some kind of pet thing. The biggest problem when you look at the MOR data on leases is that they don't contain the proper addenda, or they weren't using the HUD master lease anyway. Is there a choice of a 1 year or 2 year renewal? Oh, that's what you just answered there. Sorry, I was not paying attention to I was looking at the Q&A and not the chat, Ari. So, and
the thing is that, the tenant signs an annual, and that's a 1 year deal, and the tenant moves out in 1 day's notice, he gets a security back. So, it's not, there's really no real purpose in signing a lease. It doesn't give the owner any greater protections, and the tenant, he has his rights based on the HUD handbook, regardless of what you want to make him sign. You can sign a new house rules, you can, update those kinds of things. But as far as the lease itself, other than that original initial lease, the Section 8 model lease, the leases are not important. You can have them sign a lease, renewal, that's fine. 1 year, because it's going to be along the terms of the annual. And most people focus primarily on the annual because that's really that's what binds you and that's what binds him.
Okay, so contract rents we've already talked about a little bit, and we can get up to 120% of the fair market rent. Ari, what kind of hoop does HUD make you jump through to prove that 120% of FMR?
I mean, so that's going to be, a rent comp study. You're going to have to get that from an appraiser, and they have to know. There's a whole bunch of requirements that HUD wants of their appraisers, and you got to sign different certifications they have to sign. But that's going to have to come from an appraiser, and you want to make sure you have an appraiser that's familiar with this process because, they'll go through every line and they'll, they'll send you back corrections, and it could be complicated. So you want to make sure you have someone that has experience appraising properties for HUD.
Okay. Now, I thought we're about 15 minutes in before the break. So if we look at this process, Ari, can you describe the flow of paper or information from the tenant coming in initially to where I've kind of outlined it here. If you could go through that and elaborate each of those areas a little bit. I will talk about the systems a little later. How does this work in reality for an owner?
Yeah. So, once you open your wait list, and assuming that you're taking applicants, and when we get to, the second half, we'll talk about the wait list and the fair housing, marketing plan. But someone comes into your building, your wait list is open, you're accepting applicants. So I've seen properties do it two different ways. Your application has a whole bunch of criteria which HUD actually requires the tenant fill out on an application.
And we'll look at one of those a little later today.
Yeah. But, some landlords don't want to go through that whole process of a full-fledged application. And so they'll do something like a placeholder where you just kind of sign up some basic information, and then you kind of put it in the list and then have the property reach out to you in a year when your name comes up. But let's assume you're going through things conventionally. The tenant comes, signs an application, it has to be time-stamped, you mark it down, it sits there in a box. And until you have a unit that's going to be ready. Once you have that unit ready, that's when you'll call this applicant down and you'll go through this whole process. So they could apply, and it could take a year, 2 years, even longer before you're actually going to have to get into some of these specifics. The basic rule about HUD is, very simple. Any piece of information they supply has to be verified. And that's going to be true about the certification, income, assets, expenses. It's going to be true about, anything that's part of the application, their previous, landlord history. You're going to need, verification from the previous landlord. If they're an eligible non-citizen, you're going to verify that through SAVE. You're going to want to see social security numbers, cards for every single resident. And so during that initial meeting, you're going to be telling them what they need to bring, and, they'll bring some stuff with them. Chances are they're going to have to get back to you and supply the rest of that information. And of course, they're going to sign there the form that's going to allow you, the 9887, which is going to allow you to start screening them. And then once you have your information, you have your permission to screen, you're going to start doing your own research. You're going to start reaching out to all the various points of contact for verification. Obviously, all this while entering this information into your software. And then, if they're eligible, then we could start proceeding with the move-in process. But there's a whole lot of work, which is why we talked about special claims. This could be a several-week process, and you can't demand they give you the document today. They have a couple of days, to supply it reasonably. So you're missing a social security card. Okay, we'll get it to you. We're missing, this piece of income information. We'll get it to you. And then, your background, you're going to do a regular credit and background. Of course, credit doesn't matter as much when you're in a subsidized property because, HUD's going to be kind of kicking in most of the money. But your criminal background is going to be very important here. And I think we'll focus more on that in part 2. And when we talk about the tenant selection plan, about exactly how the criminal screening is going to work, because it's been a really gray area in the last few years, and so I want to spend a little bit more time on it. but that's your process. So you know, you got to leave yourself a couple of weeks, and you know, everything's got to be done correctly. Because if you make a mistake at move-in, you know, the repercussions could be severe, because you move someone in, turns out that they weren't eligible. You don't catch it until a management review a year or two from now, and it turns out that, you know, from the move-in, this tenant should not have been there, and you know, it's gonna give you a headache.
Okay, so we gather all that information, and you talked about your software, Ari. That in general you can get a initial determination really quick
Yeah,
about their ability to meet the eligibility criteria.
Yeah, so most softwares will have something called a quick qualify, which is you put in the name, the age of the residence, because obviously depending on the age, you're going to get different deductions. You'll put in, based on what the tenant told you, back of the envelope calculation, how much income, assets, and expenses they have. And then it will usually spit out, based on your income limits in your area, whether the tenant is eligible. Of course, this is not going to replace your actual move-in application process. This is kind of just back in the envelope that you can know for yourself, and you can inform the applicant, hey, by the way, you know, you're not looking good, or you know, you can move in here. So that's just kind of a feature that the software is built in to make everyone's life easier, but that does not take the place of the full-fledged, you know, application process, which is going to be, you know, this is required, you know, to do the heavy lifting.
So after you make that determination of eligibility, then you would start to verify the information. After that, you would add them to the wait list, I guess, essentially is what you're saying?
No. Again, you know, as soon as they fill out their application, they're on the wait list. That's time stamped, and they're on the wait list.
Okay, that was why you meant that you mentioned the timestamp there. Okay, and I got some other questions for you about waitlist management, but maybe that'll be in part two. But we'll go from there.
Yeah, and they could sit on the wait list for a couple of years. Now, we could talk about purging the wait list, right? Once a year, most management companies will go through the wait list, send out letters, and try to make sure that you're still interested, just to clean it up. But you know, what I'm talking about is once the tenant's name, you know, is up, you know, if someone tells you, hey, I'm moving out in a couple of weeks, you can start getting ready to fill it. That's when you would call the tenant down and begin the heavy lifting. But until then, they fill out an applicant, you keep that applicant in a file, they sit there, and they'll sit there as long as, as long as it takes.
So I think this is pretty much how the process goes. You know, you screen, you admit them to the units based on your place in the wait list. At that time, you would ensure all the other criteria were met, execute a lease, sign a 5-9, you know, go through the rest of the process. And that's, go ahead, Ari.
EIV, you know, there are EIV reports which need to be run upon application to make sure that they're not living in a different HUD subsidized property, and then you'll have the issue of a double subsidy. So
yeah, we're going to get to those as we start now into the HUD systems.
yeah.
So when we look at HUD systems, I don't know that I put these in the proper order. They were just what we had for tracks, and you had some others too. How do you want to go through these, Ari?
Well, you tell me. You know, you wanna pull them up as they come, and we'll kind of give some background.
Yeah, I mean, I've got these queries here, but I don't know that they're the ones you gave me or they're the ones that we had in other places. I'm just let me go down to the materials and I'll open them up. Sorry, I have too many windows open.
If you want, I could, you know, I could do it on my screen if you
Yeah,
want.
why don't you do it on your screen? I'll stop sharing and you can start.
So let's talk about the different HUD systems here before I share my screen. So the track system is the system really where, you know, you're going to communicate with HUD. That's where you're going to submit every month. You're going to submit your vouchers. You're going to submit your tenant certifications. All that kind of stuff is going to be submitted through the track system. In every single software, that tracks is going to be integrated perfectly. So whatever your software you're using, you're going to go ahead and create a tracks file. And let me just, I'm having a hard time pulling up from the share file. Let me do it this way. Sorry. So you're gonna put in all your information. You're gonna do everything, and then you're gonna come. You're gonna do all your certifications. And at the beginning of the month, your software is gonna put together a HAP request, and they're gonna pull together based on all the information that you put in over the previous month, and they're gonna send a request to HUD for X amount of dollars. The way that gets sent to HUD is through the track system. Like I said, integrated completely with your software. So the picture that you pulled up before, which I'll pull up again here, that's not really going to be something that you're going to have to deal with, because like I said, it's all going to be done through the software. Give me 1 second. I apologize. Here we go.
Now, Ari, for me,
Yeah.
and the auditors here, I am under some interest. I have interest in some of these reports because they may help me conduct my audit a little better.
Right. So let's take a look at the tracks. Give me a second here. I'm sorry.
Hey, they want you to stop in the middle of your Zoom class and unupdate the new one, install the new update.
Yeah, don't worry about it. I'm going to ignore that because.
Let's just do that right now.
So here we have, this is in the specific software OneSite. I'm sure there are people that are listening in that are using OneSite. This is how it looks. You're going to create your tracks file right through here. This is going to come up, your October 2022 voucher. You're going to create the file and you're going to send it directly through here. It's really, it's a painless process if you're doing things correctly. When it comes to, HUD also has an inbox. The tracks, has an inbox. And here's an example of a different software we use. This is one of the older softwares, FHA. This is a server-based software. There's an actual inbox where HUD could send you messages. And here's that same kind of thing in OneSite, where they can actually send you messages. In my experience, these messages are almost never worth looking and monitoring and tracking. You have an inbox there, but if there's any real issue with your voucher, your contract administrator is going to contact you directly. And they're going to say, hey, you sent us this certification, doesn't make sense, or why'd you do this? And they're going to give you the opportunity to correct it before you resend. So, when it comes to tracks, you're pretty much working within HUD. The only time you might want to look at tracks is if there is a real problem and you can't figure out what it is. And so if there's some reason your voucher wasn't cleared for payment, you're going to want to go into tracks and you're going to want to try to figure out, what's going on over here. You'll run a report. Well, here's an example of another tracks that you're sending to them. You're going to want to, there's going to be an issue. You're going to go into tracks and you're going to run, let's say, for example, this is called a late recertification report. You'll go into the track software and you're going to run this report that says, hey, there are late certifications. And you'll see here, this last column tells us if it's terminated. We have 2 tenants that are terminated here. One of them was TI, which means that this tenant was making too much money, so you terminated them, and that's fine. On the bottom here, you have an HQ termination, right? For some reason, someone down in HUD automatically flagged this one. In this particular case, the certification wasn't submitted in time. And so they'll go ahead and terminate. And so you may have to dig into some of these systems in order to figure out some of the underlying issues. But if you're doing things correctly, you're not going to have to worry about tracks too much. Here's another one. Here we have a list of our voucher report. I know this is something that you guys deal with. This will give me a list of all the vouchers, for all the months. That's the voucher date on the left column. This is sometimes useful to come into if you want to see if your money is going to be coming in time. That's something which.
Now, Ari, on this particular thing, we would use this as basically confirmation that the money was deposited. From a third party. So if this prints from tracks, we say, hey, look at that. We're pretty much getting a confirmation that would allow us to skip some other testing procedures, maybe for cash receipts, because we can see the date it was deposited, the amount. We should write to the bank statement and prove most of those numbers there on the amount paid column.
So that's for sure. And this is a report that I will go into tracks and I will use it. Do auditors have access to these reports, or you need the owners to generate it for you?
We need the owners to generate them.
And so again,
In theory, in theory, the auditor can be assigned in, but most auditors have I numbers and not M numbers in the WAS ID.
Yeah.
So I numbers cannot run the tracks reports.
Yeah. So
Now, would you
just run down a list here? So here we have, an October voucher. You sent it in the beginning of September. This is the initial amount that you requested. So, before the beginning of the month, so you submit always the beginning of the month before, until your money comes in, you'll get if everything is going well, you'll get a P10 status code, which means the voucher was approved, at the beginning of the month, you should be getting your money. You may find other status codes here. If there's a funding issue, if there's some other errors, if your contract wasn't renewed, they're going to hold your money. This is where you would see all that. And then once your money comes in, you'll get the estimated pay date, the tenant ID, and then of course, how much money actually ended up coming in, the amount that was paid. So this is a useful report, and this would be, from an owner operator perspective, this may be the only report that you're going to actually run. But from an auditor, yeah, this is a great report because this tells you, everything you need to know about how much money came in, and this is the most accurate, version of that.
Yeah, there's another version that's not as accurate as from what I recall. Now, does that answer Melanie's chat question? She said, once you send the voucher to Trax, what comes back from HUD saying approved or approved with adjustments? One of her clients is saying nothing.
So again, depending on who your contract administrator is, but you should be in direct correspondence with them all the time. I mean, you send a voucher within a day or two, they should be sending you an email. Hey, we have, an issue over here, and give you the opportunity to fix it. Or they'll say, hey, look, you requested, $125,000. We're only going to give you 123 because X, Y, and Z. Make sure you fix that for next month. So if this guy's not getting communication from the contract administrator, then that's a serious issue, because these problems could compound, and then, you're going to end up, leaving a lot of money on the table.
So if the voucher is approved, what happens?
So again, you should be getting an email that's saying it was approved for the amount. So, you'll get an email if it wasn't approved, if there's an issue. And then once you fix those issues, or if there were never issues in the first place, you'll get an email. It's called a voucher reconciliation report. And you should get that for every voucher you submit. There should be one for every month. And, if you're doing things right, then it's one page. It says you requested X amount. That's what we're going to give you. If things are complicated, it's going to detail where those discrepancies are. But that's absolutely essential to running the property properly and keeping track of what's going on. Otherwise, it's going to be a mess.
So you would agree that the client's assertion that nothing comes back is not really probably appropriate in most cases?
One more time, I'm sorry.
She said her client is saying that nothing.
Yeah.
The client says he gets nothing back, or the client gets nothing back. So you would not agree with that. You say that in every case, something comes back.
Yeah, so two things. So first of all, it could be, in almost every case, it could be something as simple as the contact information wasn't updated. And so, that's first of all. And so, yeah, you can definitely change that contact person. Trax is a system which is available to anyone that the owner wants. Anyone could get a login information here if the owner lets. As far as who the contract administrator is going to communicate with, usually the contract administrator will send out once a year, like an updated contact list form where you can update, your contact list, who they should be sending emails to. But they should reach out to the contract administrator right away to get that resolved. Now, the one time where you may not receive information will be if you have the best contract administrator of all, which is, of course, HUD. HUD does administer some of their own contracts. And if that's the case, HUD is just simply, completely incompetent when it comes to administering these contracts. So you could send a voucher, and 99.9% of the time, they'll just approve whatever you ask for without even sending you anything back, which is kind of a blessing. There's very little oversight. Usually there's no MORs. So if you're one of those lucky, few contracts where HUD is administering it, you're not going to have that check from the contract administrator. You're not going to usually you won't have any contact with them. They usually won't be finding any problems, which is usually a good thing, because they're kind of not there's no oversight, but if you're making mistakes, they're not picking up on it either, and that could end up costing you.
Ari, so that would say that the voucher recon report does come via email.
Yeah, okay, so she just responded that it is HUD. There you go. Okay, that's the answer. So if HUD is administering the contract directly, good luck. I mean, you're going to get very, very little in terms of feedback from them. Melanie, are they not paying the full amount that you requested, or they're paying it, they're just not emailing you about it? That would be interesting, because usually I've found when HUD is doing it, they'll just approve whatever you ask for, and so they're not going to communicate with you.
Well, Ari, we're at 11:40. It's been 11:44 for a second. I think it's going to 11:45. It just did. So, yeah, and they did not approve the entire amount. So what I think we should do is take our 10-minute break. And Brittany, I'll address that question when we come back, and I want Ari to comment on that. So let's just take our 10-minute break, and we'll be back at whatever that time would be. For me, it's 11:55. For you guys, it might be 1:55, or we have people listening from Hawaii maybe. So we'll take that break and come right back. Well, we're back. This should get us done about 11, 12, 1:40, 95 minutes from now. So, okay, Ari. Now, there was Brittany's asking a question. I think it's more oriented towards me, and I'm gonna share some of these reports I've got on tracks, and then I want you to, if you can comment on a few of these. So, Brittany, this is what I think, and I'm going to let Ari kind of talk to me about this. Now, the voucher summary, all this does is tell us, a little bit about vacancies. Now, if you're in subsidy, you have a lot of requirements to get this done. This would help you decide a little bit about the vacancy loss that you're taking on the financial statements. Now, in particular, I think what I will do here is this is a good time to bring in a question on the financial statements. Oh, sorry, that was not the one I was looking for. And this might help Ari a little bit from our end to what he's does not understand about what we're doing per se. When you look at these financial, I'm going to go all the way down to the HUD stuff, the HUD supplemental data, and I can put this in the materials. We're tasked with, remember, HUD does something very unique. From what I think is unique, and it's a good thing, is we actually show you the cost, the dollar value of the vacancies themselves. So we're not looking at a unit count. We're not looking at those kind of numbers necessary to get a vacancy amount. We're managing the gross potential rent. Now, on the rent schedule, you get essentially the gross potential rent. So if you're subsidized, you know what next year's gross potential rent can be. It can't be more than this. You cannot book more revenue than that. Okay? So you know what that number, if I was looking at the project here, that gross potential rent would be 901,728. Now the difference might be that the rent changes in the middle of the year. Well, they never are going to change on a calendar year basis. Nobody at HUD's working at that time of year anyway, nor would the contract administrator. So their rents will be effective as a certain date, which means you have to put just a bit of a table together with last year's and this year's changes, so you know what gross potential rent would be. So when I look at these numbers, I don't find a lot of utility in this report necessarily. And I don't really, this was the one voucher payment summary, Ari mentioned this, that the other one was a little more accurate. So we're not really looking at each of these reports. Now this one, Ari, when I look at this here, let me tell you why I like this report. And it's a very specific reason. And I'll go back to the statements a little more, Matthew, in just a minute. When I look at this report, what I know on this report is you get a calculated assistant payment and a reported assistant payment. The calculated column is the tracks calculation. And the reported AP came from your software system, right, Ari?
Yeah.
Is it pretty normal to have variances or discrepancies of that amount?
Well, those should be resolved by the time, this is the kind of back and forth that we're talking about. But, if they calculated something and, you calculated something else, that's going to cause your contract administrator 9 out of 10 times to say, hey, what's going on over here? They won't usually pass it on through with such a discrepancy. It's possible, but, it shouldn't happen.
Okay. Now, I don't, this one I don't use as much. This one is the one Ari showed just a minute ago for the vouchers. Ari, can you explain this percentage, compliance percentage off to the far right there?
Yeah. So again, that's if you're running your properties right, you don't ever really pay attention to your compliance percentage because you're submitting your voucher request, they're paying you your money, and you're not that concerned. If that number goes below 90, I think your voucher gets held up. Is that 80% or 90% less?
90. I read 90 again.
90. So
90 is what they're listing on the Q&A now for the COVID situation. They did not waive the 90% requirement for COVID.
yeah. So, there could be some behind the scenes reasons why you're not in compliance. Again, if you have the proper, avenues of communication open, you're not going to have to worry about that. You're going to be well over 90%.
Well, Ari, what does compliance mean? What compliance are we trying to be complying with?
You moved in somebody that was overhoused. You moved, too many people living in, 3 people in a 1 bedroom, or, underhoused, right? You moved in 1 person into a 2 bedroom. Something's wrong with their income calculations. So something's not adding up in the certification. So for some errors, they'll kind of pass it on through and just let you know. Other ones, and when those build up to a certain point where it's, below 90%, then that's going to actually affect you getting your voucher.
So this isn't anything like a compliance percentage on how many of your recertifications are current.
Well, I think that does play into it, but it's primarily how many units are actually, well, again, because if a certification is not done on time, so for 3 months, that's fine. After 3 months, that's going to get automatically flagged, and that's going to affect your compliance percentage.
So that's a factor in it too, but it could be other factors that drive that.
Other things that are wrong with your certifications, and
Yeah, and I don't think most auditors know that they're trying to keep 90% because you wouldn't. A lot of people I had this happen to me where they stopped paying attention and they didn't really notice anything until HUD cut their subsidy off.
Right,
So
exactly.
that was a real attention getter.
Yeah, because you're not usually kind of working in this system. You're focused much more within your software with that open line of communications. But someone like Melania, we spoke earlier, with where HUD is the contract administrator and there's no communication. And I don't have much to say other than to try to find the right person in HUD. There are some good people. Try to find the right one that could that will listen to you and kind of help you out. But for people like that, you may be paying attention to the back systems a little bit more because you may get information there that they're not supplying.
Okay. Now, Melanie asked about gross potential rent includes utility allowances if applicable. My understanding that it does.
So again, I don't want to confuse. I did it already twice with auditing language and management language. But utility allowances, and this is something which really should be posted on billboards to anyone that's dealing with HUD. Utility allowances do not go to the owner. That is not money that the owner gets. That is not part of his.
It's a pass-through only.
It's pass-through. That goes straight to the tenants. Now, that could end up going to you because if the utility allowance is $100 and the tenant owes, $150 in the tenant portion of rent, keep the 100 and the tenant will only have to pay 50. But that utility allowance is something which goes directly to the tenant.
So I think the answer in that regard is if you look at it, it's not in the revenue you recover. So I'm probably going to change my answer. I never thought about it, Melanie, that I think it's not really in gross potential rent because it's not revenue to the client at all.
Yeah, it is not included. Exactly.
Okay.
Now, again, as far as audit, the thing that you would have to look at is the utility reimbursement checks. Again, we'll talk about that more tomorrow, but there may be a point where, very often you'll actually have to cut checks to the tenants.
Yeah, you're on negative rents, right?
Yeah, but that money the utility allowance is not included in the gross rent potential.
Okay, now, Brittany, here's the report. This is another report. In fact, I'm going to skip this report and come back to it. Do you mind if I do that? The other report I don't mind is move in and move outs. Here's why. This gives me a confirmation and tells me how to select my move in and move out samples. So, Ari, we have to pick a sample of the move ins and the move outs. This is where I would pick that sample from. I could get it out of the prior screen because it would tell me who moved in during the year versus an annual recertification. But I just find this to be very clean. So now the software, the client's, your software that you use every day should produce something similar to this, shouldn't it?
Yeah, but absolutely it should. You can print out, again, depending on the software, the reports, whatever they decide to title their reports, but you can definitely run just a certification report, who moved in that year, there's turnover reports, so you can get all that information from them. But this would probably, again, this is the information that HUD has. And so, there can be discrepancies if you didn't report the information properly or HUD didn't receive your transmission. So, you may want to look at both and just kind of compare them against each other, but either one would probably be good enough.
Yeah, for the risk involved, I think I would just pick one of these. It's easy to understand. This one's easy to understand. If you get the client software, some of the reports, to me, get a little overwhelming unless you really know how to read them. Yeah. Then I don't really pay attention to the project evaluation report. I have toyed with the idea of using this as a risk assessment tool to say, look, every time you have something that happens unusual, the risk that the client or the agent documents these exceptions appropriately increases. Now, Ari's looking at that going, I don't ever make those mistakes. But if you have elderly without a medical allowance, that gets people's attention. If you're reporting no assets, no family income is a pretty significant compliance hoop to jump through. There's things you have to do to certify that there is no income, right, Ari?
So again, they're signing their certification, they're signing the certification paperwork, and that's usually enough. The only time you would have to verify no income is where you had a job and then you're claiming that you no longer have it. So you'll need you want verification of that. But if you never worked in the first place, some people may want to cover their bases and will make you sign a zero income affidavit. But I don't think HUD requires that of you.
And then EIV reports would mirror the result. Yeah. Similar result.
Exactly.
Okay. So I don't really use that, and I don't think I have to get into the next one, the verification report, very much. This is just telling me, what the rents are, household counts, things like that. So let me go back to the one I like. So I like the move in and move out report, Brittany. And the other report I'm curious about using is this Trax Assistant Payment Report. Now, we've tried to estimate income out of this thing, and it gets hard because if you look, 952, this person right here, there are 3 recertification events for this individual. Now, one of those was caused by a rent change. And his income, her income, whatever, their income, didn't really change. Now, the reason I do this is I look, there's the Trax AP, calculated AP. There's the MAT. MAT is the system that communicates the client software to Trax. That's why they call it MAT in that particular case. And we have a total difference and these should have all been resolved, and it calculates a total tenant payment. And then it actually shows an annual income and the adjusted income. And usually I have it downloaded into Excel, and then I just calculate the adjustments over here on the side. Now, why do I do this? And I want to get Ari's feedback for that. I have the number one control over tenant file testing is that HUD recalculates everything. Ari doesn't get a payment until Trax agrees with him. And if he has a problem there, and the way Trax accounted for the income or whatever, they use this number right here, and that number better agree back to what Ari's system shows. So in other words, we communicate in a loop. Information comes in. Ari enters information into the system. His system uploads that information to HUD, into Trax. And then we can produce this report. So when I look at this, I have a sign of the control that HUD is recalculating based on this income. So when I pick up I've actually put this into a spreadsheet with the tenant file testing, and I will show it on part 2 when we get more to testing. And I would just go look at the income to determine, did they verify that income? And I have a control that HUD recalculates everything. And then I will ask Ari, how do you make sure that this income or the information entered in your system is correct? Do you do things to ensure that?
Income is correct?
Yeah, so like income, what I'm really talking about, Ari, would be something about QCing your tenant files.
So again, the certification process requires all sorts of verifications. And so, you're assuming that everything is being done, you're hopefully that, that's your first line of defense. Is your question, you want to know if there's QC, but regarding whether the information is being keyed in correctly?
Well, usually, yes, to say, sometimes it's a regional manager, or a QC department, and they'll just review the files and make sure re-verify the information was uploaded to software correctly.
Yeah, so yeah, there's no official HUD requirement, to have that. They obviously want to see that you have a compliance team and people that are overseeing things. But the tools that are available now, especially with these new softwares, is they have these kind of built-in workflows where the property manager at the site level puts in all their information, and processes the certification. But then in order for that certification to move to the next phase, and you could send it to HUD, it needs to be approved by someone at a higher level. And ideally, the site manager would upload the entire file into some sort of secure cloud-based storage system where every document could be reviewed, the calculations could be, checked over, and then they'd go ahead and approve it. And then that's kind of your internal quality control. Not every company is going to do it. The smaller companies, obviously, they don't have that kind of personnel necessarily. But the softwares are allowing for it, and they have all these built-in systems that make it very easy to do. Sometimes with the spot check. So a lot of my companies, I'll spot check certifications. I'll come down, every couple of days, every couple of weeks, ask to see a new move-in. Let me see an annual. Certainly before MOR, you're going to be doing a lot of these reviews. But those are the basic, built-in controls.
Okay, so some entities will have a specific review QC process. That would be a very beneficial thing to inquire about. And that's why I run this report. If I looked at this report, the reason I would use that is just to simply say I've got the income that HUD lists, or the client software listed. I have the contract rent. I have the calculated amounts. I move out to the side. I can verify the deductions by just calculating the difference between the annual income and the adjusted income. And then I just add columns out to the side for the other attributes I'm testing. So in other words, did they sign the 5.9? Did they get a 9887? Okay, or a 987A? Did they get third-party verification of this income? So that's why I would use this report. So the two I would use the most, I do like the voucher report, and this is not hard to get, but I do like the Trax voucher list because it is an absolute confirmation that HUD paid this money. You can tie it generally straight into your bank statements. It's 100% done, and it's a confirmation from a third party, and you can receive it directly from that third party, essentially. I do like this one just because of the information involved. It shows the control process for HUD. And if I can marry that with a quality control process where they're testing, the data, verifying the data, I'm in really a good spot for that. Of course, then last but not least was the move in and move out report, just as a sample selection tool. So I hope that helps, Brittany. Those are the ones I would do. You can use those examples in these slides to tell the client that, we have, and this, Ari's already told you why this is the case. We sometimes get a lot of people at the tenant, when the CPA asks for this, they're going, why? You know why? Because they're really relying on their software. They're not going into these reports unless they absolutely have to. I think that's what you've heard from Ari. They're more familiar with their software. It's more familiar to them. They would not go into these reports that much. Move in and move out you can get from the client anyway, out of the software. So now, Ari, EIV, do you want to give a little background on this system?
Yeah, so EIV is the Enterprise Income Verification System, and this is 2001. Yeah, okay. So that's where HUD is the system that allows managers to verify a lot of the information regarding their residents. So particularly their income information, the benefits, Social Security, unemployment, that kind of stuff. Not unemployment, disability. If they're receiving subsidy in a different property, all that information is uploaded from the various agencies, the Social Security Administration, the Health and Human Services. Their data all gets fed into EIV, and then the owner-operators are able to run these reports in order to help determine eligibility and stuff like that. Now, obviously, with a system like this, this is really dangerous and ripe for abuse. We're dealing here with, private information from American citizens, and just to allow any random person access to EIV is a pretty dangerous thing. And so this is something which HUD is kind of obsessive about. Number one, that means that in order to get approved to view EIV, you have to jump through some hoops. You need to apply. There has to be an EIV coordinator in your property if your property is big enough. You want to make sure that you're certifying twice a year, having that certification renewed. You have to run this cybersecurity awareness test, and I don't know if that's something less that you guys check for, but that's vital. That's on the MOR. That they check for that always. They want to know everyone.
I have never checked for that. I will say this, Ari, based on what you're telling me, I've always considered that the overhead for EIV is almost worse than the reporting itself. The control process, the keeping track of logins and getting people terminated or reassigned, all of those things, the overhead for EIV is astronomical.
Yeah.
And it contains a lot of risk.
Yeah. And it's also such an old, I mean, you look at the system, it is written in 2001 and hasn't been updated since. It looks like, like the Drudge Report, just, really, really, they could do much better. But so that's number one, is the overhead, just getting people approved, and they're going to check every one of those boxes on your management review. And that's something that, you should be aware of, making sure that anyone who has access sign the rules of behavior. The cybersecurity thing, and I'll send out a link later if I find it. I mean, it is one of the cheesiest things. It's used by the Department of Defense, and it's almost scary to think that, this kind of, corny training is what's protecting our state secrets, but I'll send it out there. You got to print out a certification every year. So that's first of all. And number two is, and I wasn't involved in Congress at the time, in their deliberations, but, because it's such a powerful tool, they limited its use. And so you cannot use EIV to verify a tenant's income information. You can use it to verify your verification of his information. So a tenant applies and she gives you pay stubs, or you reached out to the employer and you asked them to confirm the income amount. They send you back a letter. This person's making, $500 a week. You can then go into EIV and you could verify that your information is accurate. So EIV is not an independent verification, but it is an additional verification to the income. The exception to that is Social Security. Social Security, HUD a few years ago allowed you to then use it as the sole verification. So if a tenant comes in, they're getting Social Security, they don't need to bring in any statements. They don't have to go to an ATM and print out anything. Awards letters, you can just go into EIV and it will pull up to Social Security, and that would be enough. Otherwise, it's kind of a very big burden, and there's not a tremendous amount of upside unless you're in an elderly building where you can use it exclusively. Otherwise, it's something which, like you said, it requires a tremendous amount of liability and overhead, and is mandated. It's not like you can waive the use of EIV. You must use EIV. You must run those reports at the correct times. And so you want to make sure that that's done correctly, because EIV is, again, because of the nature of the system and all the personal information involved, they want to make sure on the MOR, I mean, that's going to be a big part of it. They're going to want to make sure that you're doing that correctly. And if you're not using EIV correctly, it's the only thing on a management review that they'll dock 5% of your subsidy. 5% of your subsidy will be docked until you can fix it. And they'll give it back retroactively, but they'll actually dock 5% of your monthly voucher payment until you fix those EIV problems. You have to print EIV and keep it in the tenant files. Tenant files need to be secure, but you absolutely, keep them in the tenant files. I'm not sure if you're asking if the tenant can have access to his own reports, and that, if he requests it, you are allowed to share the reports with him. You can't send it to anyone else. You can't email it to your auditor. But you can allow the tenant to have access to his own reports.
Now, Ari, you just said something there. Now, but Matthew, by the way, a lot of people it is permitted to have it in the tenant file, but if the wrong people come to review it, it's kind of like VAWA. It has to be removed. So if somebody who hasn't signed the rules of behavior, which I'll bring up at the moment, has not, if you're going to give the file to somebody like you, maybe you're managing tax credits at the same time, and the tax credit auditor shows up, you cannot leave the EIV information in the tenant file. Sometimes they'll keep those things like VAWA and EIV separated. Maybe a separate folder in the folder, right? So you can hurry and remove it. Go ahead, Ari.
Someone working in your office that's, didn't sign up for all the EIV use, they, like you said, they have to sign rules of behavior for people who are going to maybe see the information that are not actually, using EIV. There's a separate rules of behavior for them that they would have to sign. So anyone in that,
and that's what we, the CPAs, would be signing.
Right.
So we would be signing the rules of behavior of that nature. Go ahead.
It would be a rules of behavior for a non-HUD user, for a non-EIV user. There's rules of behavior for using EIV, but then there's for a non-user as well. Yeah.
So when you look at that, it's the only system that actually that I know of has stated criminal penalties, both jail time and fines. And that generally makes the system very worrisome. Plus, it makes the obtaining of the consents much more valuable, because if you access EIV without a valid consent being on file, you've now broken those rules of behavior. And I've had situations where somebody came in and basically had 13 or something accesses of EIV information because they were not getting the consent information annually. I think they were trying to move to a streamlined recertification process in a senior building, and they weren't getting the EIV, the 9887s completed each time, even though they were, so they were behind on their 9887s, accessing EIV without it. So that ends up being a real problem. I have the rules of behavior here just to say, this is for individuals without access. Now, auditors, most of you are auditors on the phone, on the call today on the phone. You do not have to take the security awareness training. I think that's the Department of Defense stuff that Ari's talking about. It was a little cheesy. So this requirement here, I wanted to highlight this. These were the damages that you could be susceptible to, and the client is also susceptible to those same risks through misuse. So, as I already said, a lot of downside, not a lot of upside. Now, Brittany, you asked how are people getting around viewing EIV information in the COVID world without site visits since they can't be shared electronically to us. I don't know that that was in our HUD 101 class today, but let me just say this. If you look at the HUD Q&A, no, not the Q&A, the Housing Notice 2020-04. And I kind of wanted to get Ari's twist on this. Tomorrow we're actually having an advanced class about maintaining profitability, on Section 8, kind of a much different class, more oriented towards management company personnel. And this was going to be brought up in there. But today I thought I would bring this up just because it seems to make sense for this conversation. And wouldn't you know, I can't find it here. Oh, no, wrong one. Okay, sorry, 1120. Now, Housing Notice 20-4. If we go down to, this pretty much allows EIV to be transmitted electronically and everything else. While I'm getting this, Ari, do you want to answer Grace's question in the Q&A?
Yeah. So the issue here is the following. So a resident will not be in the EIV system if they're not living in a HUD subsidized property or public housing. So if you're going to run, when someone applies, you're going to have to run an EIV to see if they're living in another building. If they're not, it's going to come a blank, and you can't run income reports. You're going to want to try and verify their income. They won't be in the system. They'll only get into the system after you move them in and upload that information to Trax. That's when the information will get fed into EIV. Then they'll be able to pull information from the other agencies. But until you move them in, that information will not be available for EIV. So when you're, let's say, doing an annual recertification and you're going to want to run an income report, that's no problem. But when you're moving in the resident, their income information will not be in there, especially if they hadn't lived in a previous property. So it takes a couple of weeks for the information to get uploaded. So what you'll do is within 90 days of the move-in, you'll go back in and run an income report just to verify the income that you put in at the move-in, that the tenant obviously supplied. So all the income reports are run at the time of certification, with the exception of the move-in. Since the information is not there, you're going to have to do it again within 90 days, because that's usually how long it takes for this information to get uploaded. EIV could be behind. It's not up to date. So a tenant gets a new job, it may not be there that day, that week, or even that month. So that's the 90-day rule. Again, not 90 days from the application, because again, the reason why you're waiting 90 days is because you need to move them in before that information becomes available. And and just one additional thing is that there's you go first, Les. I'm sorry, and we'll get back to this.
No, you keep going.
It was just, there are other reports not related to income. So there are, a whole bunch of other reports which you're obligated to run either quarterly or monthly, which relate to all different aspects of income and jobs and employment and deceased. There's a deceased tenant report, etc. Some of them mandatory, some of them voluntary. You're going to have to make sure that those master files are being kept.
Yeah, in fact, we'll get down to that here in a minute on the slides, because there are several things we need to look at. Now, the concern here was that the CPA is being told originally in the handbook, 43, gosh, where did I put it? In other words, the rules of behavior said IPAs had this additional problem. Can only be accessed within hard copy, blah, 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 blah. Now, that's September 2009. When you come into this new electronic signature notice that is much more of a topic probably for tomorrow's profitability class. Industry professionals, so this starts off with electronic storage, gets down to access. Industry professionals can have access required by their function. Access must comply with the same HUD program requirements that apply to paper files. Industry partners must adhere to special rules surrounding EIV or VAWA issues. Stored information. And then it gets down to number 5. This notice permits IPAs while conducting HUD financial audits to have access to owner agent electronic records. So, if I have an MOR, oh, by the way, if I have an MOR, do I need to have the auditor sign this EIV rules of behavior form? You will always have to have those forms signed if the auditor. Let me get back and I'll clarify that, because there's some if, ands, or buts that go with that. And I'll finish this thought first. So, Ari, it would be nice if this said including EIV, wouldn't it?
Yeah. It'll clear things up.
But it doesn't say, except for EIV, like the original Chapter 9 does, or the Rules of Behavior does. I personally think HUD's moving in this direction. I have emailed them. Look, you've got 2 choices. You either access it remotely, or you get on something like TeamViewer and share screens like Zoom, and you say, hey, Ari, show me the reports for this EIV thing. And he says, okay, here's my computer. You're seeing my screen. You get to see what I see. And that would be about the only 2 options I have. Now, that option of getting the electronic data would depend on whether the client agrees with us that they believe that gives them the right, and I don't think most clients are going to go there without HUD specifically saying so. Do you agree, Ari, that you wouldn't do that?
Yeah, I absolutely. I wouldn't,
You wouldn't believe me, would you? You wouldn't believe my interpretation.
You never know when HUD's going to wake up and decide, hey, we don't like what you're doing and here's a fine or whatever, so worth the risk.
So we have emailed them and we didn't get an answer. If you go down to the notice, by the way, this is a plug. If you are an auditor, I would email Clarissa L. Janis at HUD.gov, and I would say, Clarissa, did you guys really intend by your statement up there to give us access to EIV, or are you going to keep it from us? And that would be a very good question for them to answer. It's not shown up in their Q&A yet. And sooner or later, they've got to come out and make a statement as bold as they've made previously. Okay.
The EIV was created at a time when people were much more concerned with security. Today we live in an age where we gladly give over our personal information to anyone that asks. So, I imagine that it's going to be clarified pretty soon, and these things are going to become a lot easier.
Misty, does the EIV report have to be kept separately? I think that's a question that we tried to answer above earlier, or we did answer. No, they don't have to be separated, but in many cases they may be separated just for ease of removal if unauthorized people get access to them.
So again, your annual research reports. I'm not sure what reports Misty is referring to there, but there are EIV reports which pertain to an individual resident, and there are EIV reports that are master, EIV reports for the whole property. So you're going to have a set of EIV reports that are separate in a master file, and then you'll have EIV reports that pertain to residents, which are part of the annual recertification file. Now, if you want to keep them separate, that's fine. But there are 2 different types of reports. The master files are obviously going to be kept separately. The individual tenant files, should be kept together with the tenant.
And let me clarify this too, Ari. You may chime in here. There are, even within the files that are not in the master file, the reports, there are still, in the tenant file, there are 2 types of reports. There's the tenant reports, and then there's the tenant income reports. The income reports are usually the most sensitive because they have more data in them that's what we would call sensitive PII. Those are the ones that we can't really get access to. Frankly, all the master files, he can send us the master file stuff. It's the income reports we have a really hard time dealing with.
Yeah, so a lot of the master reports which need to be run, some of them monthly, some quarterly. The master files will be they're generally summary reports. So very often, for example, I'll give you a multiple subsidy report. You have to run that quarterly, and you want to make sure that none of your current residents are getting subsidy someplace else, or something like that. That has to be run quarterly. So 9 out of 10 times that report is going to come out blank, if you're doing, things are running smoothly. Once in a while on your summary report, you'll get a flag. So yeah, that information is not sensitive per se, but I think HUD still wants you to preserve that and be careful. Some summary reports pertain to income. There's like a new hires report, you want to report, you have to run it again at least quarterly to see who got a new job. There may be sensitive information on a master report as well. And so depending on what the report is pulling up, there may be sensitive information.
Now, for the anonymous, if I have an MOR audit, yeah, if your auditors are getting access to EIV, you better have them sign, at least one of those auditors, if you're giving them access, should have signed the rules of behavior. So one person would look at it. Most of the team wouldn't look at it. So what the auditor's going to do is they can't copy that information at all. So they're going to note that they reviewed the EIV data and write a little memo about it in their work papers. So the rest of the team did not have to get the rules of behavior. Now, the reason I stopped answering that before I got, clarified is that from an audit perspective, the only time the auditor is required to look at EIV is on a for-profit Section 8 HUD Audit Guide audit. If you are a nonprofit following the compliance supplement currently does not require the review of the EIV reports. And I would not be adding the EIV reports to my audit steps. There's no reason to go there. So we would just say, no, let's not do that. We'll do the testing outlined in the supplement, so no auditor may actually ask for EIV. So only a for-profit HUD Audit Guide audit will require it, and that's just simply because HUD says, as things change, you need to change with it, despite the audit guide not changing fast enough. But single audits changed every year. So if the auditors are asking for it and they're using it, you better have an MOR. You better have the rules of behavior in the folder around access. And Brittany, like I said, you have two choices: getting the client to agree with you that you think that interpretation's good, or some kind of team viewer, Zoomer, screen share program that seems to be a little bit of a workaround, although inconvenient, but that's what almost everybody's been trying to do. Okay? Now, we're going to just go through a couple of reports. And I already mentioned this here. If you think about the rental housing integrity improvement process, they really push the clients to get down to a very, very specific set of circumstances where they were minimizing errors. And they decided that the place they left to deal with errors was the tenant themselves. And how could we do this? Well, we married it with HHS fraud. It was really a welfare fraud system. As Ari said, it's like old. Doesn't really work very well. So that, and HUD piggybacked onto that through an MOU. It allowed them to share that, but they had to sign up to all that information, and it's just really required by everybody in subsidy. So now it doesn't work to the best, as Ari said. it's old. Data can be not right, cannot be updated. It works better for Social Security and other things. And you get monthly and quarterly matches. National Database of New Hires. This is one of those reports that you're going to run. And I'll let Ari comment when I get to the actual reports. Tenant selection plan had to contain EIV reporting in it and the policies and procedures. What is there, a brochure, EIV and you, Ari?
Well, policies and procedures is an internal document that every property has to have details
Sure.
on what they're going to do. And it's one of the requirements is that there's a brochure that you need to give out to all the to everyone upon every certification. You can get it from HUD directly; they'll give you the originals, or you can just scan one and make copies. But that's that's required on the on every certification.
So, by the way, the policies and procedures, that's an important document. As Ari said, there's a lot of overhead here. If I'm looking at this from an audit perspective, I'm as interested in the overhead as I am the actual tenant files. I have more risk in the overhead than I do in the actual tenant files. So, just from an internal control and overall perspective. Now, this really ramps up the need to get a consent. Consents are good for 18 months. Why is a consent good for 18 months? Well, recertification starts 120 days before and can go up to 90 days after. That's, by my math, a long time. 210 months. So when you look at this, those forms need to be valid because you might be running EIV reports clear up to a time past the last recertification date. And so the EIV report, it gives you time to have the consent valid through the next recertification period. Before the tenant comes in, you can run all the reports before they sign another consent and a 5-9. Is that how the process works, Ari?
Yes. Yeah,
But-
that's the beginning of every certification process. They're gonna, every single member is gonna have to sign this.
So as I am auditing, I will tell you that the most important document to obtain, if you didn't do anything else in the tenant file, I would be looking at the consents, because the failure to get the consent and then run EIV is against the law. It's not non-compliance, it's breaking the law. So that is for us kind of one of those master controlling documents that said, well, if you don't do anything else, make sure you collect those EIV forms. Now, they're going to do other stuff, but as an auditor, that form never ever goes away. In whatever situation we're testing, it could be research or it could be new intake. That form is the key form. And it authorizes you to get, all that information, and every adult household member has to sign it. Oh, of course, changes of income, other things, tenant notification requirements. Now, Ari, do you have a lot of your software doing the tenant notifications automatically?
Yeah, so yeah, that should be generated automatically. You probably usually have to go in and actually print those out. In other words, you go to your recertification button and you could generate them, but it should tell you who you need to go. Again, there's 5 of them, 5 recertification notices. The first one, when you're actually signing your annual recertification, then there's a 1-year notice for the next one. And then 120 days, 90 days, 60 days, 30 days. So any decent software is going to have that automated for you.
Now, do you email them, or how do they go to the tenant?
No, we hand deliver them. So we'll slip them in, either mail them or we'll slip them under the door, depending on the building.
Okay, now with the new notice on electronic stuff, we've talked about this before. Many people are starting to communicate more electronically.
Yeah.
straight away. And that brings another set of requirements in on this. Um, do
I'll tell you the truth. We just did a basic survey of our buildings, and with elderly buildings, to communicate with email is, I don't think that that's ideal. Um, and even with a lot of our other, depending on, I guess, where they are, the managers are not having high hopes that that's going to be an effective means of communication. Some don't have computers with internet. A lot of them use phones, which makes it a little bit more difficult. So we're very, very skeptical about how this electronic communication is going to work. Most softwares are not yet up to speed with it because this happened so suddenly with COVID and that their systems weren't really ready yet. So right now we're still kind of doing things, paper manually, and we're kind of waiting to see, how things end up.
Now, I have heard some tell me they've gone electronic, but that's more of an exception than the rule, right?
Yeah, most people are, they're kind of doing a little bit of both. They'll use DocuSign for some of the essential stuff, especially during the height of COVID. But there's so much back and forth which needs to take place with certifications. They have to give you all sorts of documents and questions that you have. That it's almost easier to just do it in person and risk getting COVID. No, I'm just kidding, but it's kind of it's difficult, and that's a very, very big unknown right now, exactly how things are going to end up. Maybe softwares rise to the occasion and make things easy, and have all sorts of built-in video conferencing and all that kind of stuff. But meanwhile, people are kind of taking a more conservative approach, and they're going to wait and see how things develop.
And of course, now it depends a little bit more on how COVID evolves. I mean, everybody's ramping up again, it sounds. So what happens this winter, a lot could change based on just the status of the virus. Now, the third-party verification, Ari already talked about that. We tell you that HUD can't correct EIV data, so if something's wrong, correct tracks, have the client go back to their employer, whatever that is. There are quite a few issues from time to time. Now,
we have where HHA, the Health and Human Service, HHS, did have errors, and that's we kind of helped our residents reach out to these different agencies and correct some of that information, because it doesn't happen often. Usually the problem is on our end or on the employer's end, but you do find sometimes that the agencies have things a little incorrectly.
So they must use these reports, and that's a pretty strong statement. So third-party source, the income report, other income reports like new hires, no income, and those are mostly to identify and resolve the discrepancies. So if you have issues, and then the verification reports are things that Ari mentioned, existing tenant search, multiple subsidy. My favorite is deceased tenants, but
oh, Les, you'd be surprised. I mean, it's especially when you're dealing with elderly. I mean, we've discovered tenants deceased through this deceased tenant report, and it's it's some if it wouldn't be so sad, it would be almost funny. But you don't know, you don't hear from them, and it turns out that they're deceased. Sometimes they're in their unit and no one knows, but often they went away with family, and you didn't even know about it until it shows up on this report. So you'd be surprised.
Yeah, well, and that's the interesting thing. Multiple subsidy is a key one. Ari's mentioned that several times. And I'm not going to go through all of these. There's probably a lot of slides here I put in here, but we don't need to go into each one of them. Go ahead, Ari.
Part two, there's a spreadsheet that I use with kind of sums up all those EIV reports, when you need to do them, and how you have to store them, and I'll have that uploaded, send out to everyone for the part two.
Okay, so we'll skip some of these. I'll stop on just a few of them. Income summary. So I'm going to just stop on what has to be retained in the tenant file. So this one has to be in the tenant file. Income summary report. You should see that in the tenant file. Now, we don't want to, as auditors, I really don't want to get too into EIV reports. What I want to know is the client's running the reports in general. They're reconciling the differences, okay, the material differences, and they keep the master file, and they run the overhead process, appropriately. Now, if you want to look at something that would be more indicative of this problem, you can probably turn to the client's latest MOR, and it will talk about some of those systems. Now, if I'm in, Ari, for us, the conversation is always about risk assessment, designing our procedures to be responsive to the risk. In this particular case, they said EIV was a corrective action. Enterprise income access and security, corrective action. Compliance using EIV data and reports, corrective action. So if you look at this summary here, 51 is 25% of the overall score. This category is rated unsatisfactory. That's a problem, isn't it? And if I went into the details, and we might go into this later for the MOR side, this is a pretty good way to get a feel for how the client is implementing this. I would, Ari, until COVID came about, weren't we pretty much on an annual schedule again for MORs?
We were pretty up to date right up until COVID.
And then, of course, there's a whole other restart now in the Q&A, and I think it's going to be another year before we really start moving normally. That's my guess.
We had a few scheduled and then some canceled when there were reported cases in the building. So New York we're seeing, New Jersey delayed them again. So,
You're seeing MORs in New York?
Yeah, I actually have one scheduled in New Jersey in 2 weeks. But they've already canceled twice on us, so we'll see what happens.
And the problem is they're probably going to have issues getting into the units. But my concern overall was that, look, you have some ability to decide how much you need to look at, and so what we would be looking for in each of those cases. So, income report not in the file when they don't have income reported in EIV, only has child support, so they didn't have a 5.9. I mean, the 5.9 has only child support, but there was no EIV income. So you get some of those issues. No dispute of EIV information had to be in the tenant file, or it's disputed and fixed, or tenant reported income not verified. Ari mentioned that. There is no way to use EIV on a go, no-go decision for income verification purposes as a standalone decision, unless the client comes back, the tenant says, we're good, right?
Yeah.
Is that the case if the tenant says, hey, I don't dispute the information, I can then rely on it?
Yeah, but then it has to be corrected. We got to figure out, some information is wrong here, and we would have to figure out a way to correct that.
Now, the biggest challenge for me also is how they correct these discrepancies. Do they document that well in the tenant file?
Yeah, so everything has to be, all correspondence should be written down. If an issue comes up on a report, every step of the way needs to be documented from the beginning. Every correspondence, every email you sent them, they should keep a log about that until the issue is actually resolved, and that has to be stored together with the certification in the tenant file.
Okay, now we get a question from Grace. If something like that happens, and I assume what you're saying happens is we don't get information in the file, or something happens in that regard. She's asking, is it still a finding? And the answer is it depends. Look, in tenant files, the creation of a finding is a fairly judgmental thing. We're looking at a file that has probably 10 or 15 attributes. The audit guide has, 18 separate questions. Now, I don't put them all in a recertification window. Some are only in use for purposes of intake, new hires, not new hires, new intake, such as citizenship verification, Social Security verification. You don't have to keep retracing all that stuff in there. And you look at the handbook on what is required for a recertification. It's a pretty small list of things. So that it might be one of a series of things you're checking. And so does it become a finding? It becomes an item of non-compliance that has to be reported in writing. Whether it rises to the level of a finding for tenant files would depend more on what are the other issues you find in tenant files. So if they didn't run an EIV report or didn't put something in the file or something like that, is that the only one you found, or were there multiples in the sample that were found to be problems? The more likely it is to be a projectable error, the more likely it is to become a finding.
That's a Misty's question.
Yes, please.
Yeah, so there are actually two no income reports. You run them, as one big report, but there's no income on the 5.9, which comes from you, and then there's no income from the HHS or SSA. It's interesting is that there is no, in the EIV guide that HUD put out, it doesn't actually specify how often to run it. Most of the reports have to be done quarterly, at least quarterly. You can choose to do it more often. These two reports, and I've sifted through them many times, doesn't give you a definitive amount. It just says, hey, whatever your EIV policy and procedure is. And so, I recommend everyone run every report quarterly, even though monthly, because some reports have to be quarterly, some monthly. And so it's just easier to just run them all monthly. It's an extra 2 minutes, and it just will save you that headache of knowing which one was which. And so I recommend in the EIV policies for each building to put in that they're going to run those no income reported reports monthly. But the HUD is vague about it, and they leave it up to you to put it whatever you want in the policies and procedures.
And by the way, that's a very important thing because it does matter. I appreciate him bringing that up. Now, I'm going to mark that as answered, if that's okay, Misty. Let's see, income report. I wanted to get down to discrepancies. Here's one of those comments. Again, we're only looking, the client is only required to do something when it's over $200 a month discrepancy. Ari's not required to go change anything if we're under that $200 or the $2,400 annually limit. So there might be differences, but if they're less than $200 a month, we don't care. We can accept that range of discrepancy. Okay, so the no income report usage, like he said, in policies and procedures, the new hires report at least quarterly, and some of these are going to go in the master file. No income report, passed SSA identity test but have no income. And I think you could look through the rest of these. We've tried to summarize them as much as we can, but there are, I don't know, there are 30 or 40 slides in here of these of the verification reports. Most of these are outside the scope of a financial audit or a compliance audit by the auditors. I tend to go back to the MOR and say, how does this management company do this? And if you're auditing most of the projects at the management company, you should get a feel for how they're doing this. Now, Ari, are the EIV reports ran at the project by the site manager or and put in the tenant file, or they ran more centrally?
So I guess it would depend on the company. There's no rule as long as the proper permissions were given. But in every property I've dealt with, it was always on the site level because they're going to see the reports. They're going to be the ones investigating the discrepancy. So, they're going to be they're generally going to be the ones to do it. They may be oversight. The regional manager or compliance director may want to see them or confirm that they were done, but it's usually going to be done on the site level.
The only thing I really stress about is if you have some sort of internal control function with the regional manager or a QC department, make sure they actually leave some form of documentation of their review. Make sure that they actually are leaving something for you to look at, like a signature or a review sheet. We're hoping to find most of those, most of that control information in some manner from that review.
Now, the ideal would be eventually, just like, Trax is communicated through your software, is that if they allow the softwares to, pull EIV reports directly, that would kind of be, the ideal, and maybe one day in the future.
We can do that. That's probably a future outside my future. Okay. Of course, this is where we're required to reimburse, and this is what Ari talked about earlier on the repayment agreements. So there are requirements around the repayment agreements, and we should know about that.
So I kind of, earlier I said I would just get back to it in the comments. So again, it's not going to be an accounts receivable, right? Because this money is going directly to HUD.
Yes.
The only thing that comes to you is, there'll be, I guess, labeled as other income would be if you get a collection fee. So, HUD allows you to keep up to 20%. And so, that's something which is going to come in, I guess, as other income or something. Because this is kind of ripe for abuse, because the repayment agreement kind of incentivizes tenants to lie and see if they get away with it. So HUD has been kind of figuring out how they're going to go about monitoring this and making sure that it doesn't get abused. One of the things that I've been recommending clients is after the tenant moves out, because as long as the tenant is living by you, they're making their monthly rent payments to you, and you could say, hey, you also owe HUD an additional, $10 a month. Once they move out, they have that liability to HUD, and, HUD has no system of tracking it, and, and they can, it's not even going to come up if they want to move into another HUD building. It's not even going to come up and say, hey, this guy frauded HUD and now owes HUD $10,000. So what I've recommended is that if a tenant moves out that has a repayment agreement balance, that you write them a letter that says, hey, you should just know you owe HUD X amount of dollars. You signed this agreement, and that's your responsibility. And again, we don't know where HUD's going to end up, what HUD's going to end up doing on this, but it's definitely in their sights. And so we should just tread carefully here.
Ari, in public housing, we do track the receivable in the system. So they do track that amount owed. You cannot go inside from a public housing program to another public housing program and not have your sins follow you. Okay. But multifamily, as Ari said, does not have that.
So, the Trax update a couple of years ago had you actually enter the repayment agreement a little bit more formally in Trax. And, whenever the Trax 202D is released, it's been delayed now for who knows how many years. But whenever that is released, we're assuming that there's going to be something about that repayment there. And so, we'll keep our eyes open.
Okay. So there are quite a few requirements around there. 20% of the amount received, that would probably go to other income. How does that come to you, Ari? The 20%.
So that's going to be through your voucher. That's going to be you're gonna enter that repayment agreement on your voucher as a kind of miscellaneous charge.
Mm-hmm.
Just write it again. It's not 20% as of right. It's up to 20%. So you're kind of supposed to account for how much time you actually dedicated going after that money. Most people I know just take the maximum because it is a pain in the neck, and they can kind of justify it just in terms of billable hours.
So it comes in the voucher, but it's not tied to an individual.
Right. It's like a miscellaneous charge. Yeah.
And so we would have to translate that over to other income. In the P&L.
Yeah.
Okay. Yeah, I'm agreeing with Ari. Nobody's keeping track of actual costs. Okay, correcting it. Ari has already mentioned that. Places where you would go. Now, the master file. Ari has mentioned that a couple of times. You're going to keep in that master file these reports: multiple subsidy summary report, deceased tenant report, new hire summary report, and the identity verification. So failed pre-screening or failed verification. And then how the notes resolved issues. And it's 3 years. The good news is a lot of EIV can be done centrally at the management company. That's where this, I think, don't you keep your master file all at the home base somewhere, Ari?
So again, most properties will keep it at the site level because you're going to run a new hires report. There's going to be a summary report which you have to keep in the master, but then there may be a bunch of detailed reports for each individual tenant. So that stuff is always dealt with at the site level. Since you're running them monthly, it's going to be hard to run them at the site and then run them over to the corporate office wherever it is. So I found most people I deal with do everything at the site level. When you do a management review, they're coming down to the property. They're going to want to see them, so it makes sense to keep it at the site level as long as it's done securely.
Okay.
Now, if an MOR order, someone shows up and they ask for it and we don't have it, we may claim that it's at the corporate office. Realistically speaking, that's not where it is.
Okay, the penalty, grace period. Now, storing and sending. This has been a big revision. If you do keep the data as an auditor, my concern here is if the client does keep this electronically, they follow the rules on that, and those rules have changed just this year. If they keep it in the tenant file and that's a paper file, no problem. I mean, it needs to be segregated out, much like VAWA, but as Ari has mentioned, it doesn't really come to the level of, what am I trying to say here? Where a place where people would really be anxious to go electronic, full electronic. So we can go through the rest of those changes there. And that took us out of the rest of that slide. Now, if I am... sorry, I'm looking for something, Ari, here. Now, there was a question of Matthew. I've left your question out on the financial statements. So let me address that right now because we're getting down to our last half hour. And I wanted to do a couple of things with regards to the lease and a couple of the other things. But you asked about the financial statements, so let me just address that right now. Oh my goodness, class sample. Now, this really is not a REAC reporting seminar, but when you look at this report, you get the basic financial statements up front and then all the supplementary information in the back. The two reports that are additional, the Yellow Book report and the HUD compliance report, the major program report. Lucky none of those reports are changing this year. Most of the reporting, when you get down into a subsidy program, you won't see broken out on the basic statements. You will only see that broken out on the HUD statements. So 5121 is where the subsidy is going to be. Now, this conversation is a good conversation because if I'm in this particular mode, I'm going to end up having a... it's not letting me add a piece of text to that. Add text. So just for kicks, 3731690 divided by 4589378 is 81% of my revenue comes directly from HUD. Sorry, my keyboard's a little away today. That's a good thing to know, because if you're heavily subsidized and you have a cash receipt sample being required, oh, maybe it was 130. Kathy's reminding me about the time. If that comes from HUD, that is a tremendous internal control thing for you. And this, by the way, I think this is a highly unusual thing, because I would add the special claims into that. I'd have to increase the subsidy a little bit, because that would be the special claims. The reason they're split apart in these two categories is that you cannot get a management fee on the special claims. That's annoying, isn't it, Ari?
Yes.
He's working all this hard time to get those things, and he can't get a management fee paid on special claims revenue. And we'll talk more about those kind of rules, in another day. But the other charges would all end up down in miscellaneous revenue. Now, in terms of Section 8 and requirements, I don't know if this one had it in there, because I don't know. This was a set of statements we got from somewhere. We made a lot of changes, whatever. Oh, I was going the wrong direction. My only other comment would be generally on subsidy. So if I'm here, obviously we have distributions. So if the subsidy contract had a distribution limitation, I would want to say that. If it's Section 8 only. If it didn't, I would want to say that. REAC wants to know, because if you're not subject to surplus cash, you have to fill that schedule out, but you don't have to live according to it. And you need to be able to tell REAC, hey, I'm a Section 8 only. I do not have restrictions on distributions, so therefore surplus cash doesn't really apply to me. Okay? And other than that, I can, Matthew, I'll put that down here in the materials. You can look at it. And if you have questions on it, you can let me know. Class sample, financial statements. Now, Ari, there were a couple of other documents, things I wanted to highlight. Man, I have just lost my marbles here. Could we talk about the leases for a minute? Ari, the master lease. I've got master leases in there. So if we were to go into, say, this model lease and address, oh, it went to the wrong screen. Sorry, hang on. I find a lot. In fact, let me go back to the MOR sample I had. When you look at these MORs, now we haven't talked much about. Can you just take a second and describe the MOR for the folks, and what the process is, what they expect, what can they see, what should they expect? Since mostly auditors, we have to obtain a copy of this and report on it, but it should also inform our testing decisions as we get ready to do the audit.
So the MOR, the Management Occupancy Review, is for the building what REAC is for the REAC is the physical inspection. The MOR is the management review, where they're kind of auditing this property. They're going to come down to your property. They're going to they have a whole big form with 50 pages where they're going to checklist everything. They're going to want to see certifications. They're going to boiler certifications, all that kind of stuff. They're going to want to see basic, property documents. But then as it pertains to us, they're going to also review, a percentage of your tenant files. And they're going to go through it with a fine comb, and they're going to write you up a report like we're looking at now. The thing about the management review is that the scoring is very, very vague. Whereas, in your REAC, your score, your physical inspection, the REAC inspection, it's very, very, they enter in a finding, it's, gets graded A, B, C, gets, depending on how many units you have. And, you could, if you follow around your inspector, you can know what your score is going to be. It's completely objective. Again, every inspector is going to look at things a little bit differently, but as far as the scoring, it's very black and white. When it comes to the management review, it's much, much more subjective. There's very, very little in terms of, absolute, the score isn't even a number score. Your score is like your report card in school. It's, the top grade is an outstanding. Then you have,
I've got it on the screen too, so.
The superior, above average, satisfactory, below average, right? So the thing about it is, if you get a satisfactory and above, there is no appealing process. So a satisfactory is the most popular score I found because, the people that are doing the management review inspection have nothing to lose. They have no incentive to give you a higher score because you can't actually appeal it. So to me, I always tell my managers, if you get a satisfactory, that's good. Obviously, you want to aim for better. You want them to be blown away by your property, but they don't have to actually explain why they're giving the score. It's not like, based on how many findings you have, that's what your score is going to be. Obviously, if you look above over there, less, each category is scored independently. And then, but, the actual number score, it's very, very subjective. And so, looking at a manager review doesn't necessarily give you the full picture, but obviously if it's below average, unsatisfactory, that's not good. That means they're finding a tremendous amount of findings. One of the things that they're looking at, if you look over there above, maintenance, they're not doing a full physical inspection. How do they know what your maintenance is? They're looking at policies and procedures. They ask you questions. Hey, how do you handle this? How do you handle that? They're also going to come and they're going to look at your last REAC inspection, and they're going to look at your findings, and they're going to want to see that you fixed them, which usually means that they're supposed to go into units and see if things were fixed. Obviously, in the COVID era, they're not going to do that. They may ask you for work orders, but that's something that you should keep in mind. And which is funny because you have a REAC 3 years ago, and they'll be coming in 3 years later and looking at your findings. By that point, the thing could have broken again, but that's just the way it is. So the manager review is very extensive. It could take a day, it could take 2 days, depending on how many units, and they're going to go through everything very, very specifically. If you find, very often you can look at the manager review report at the tenant certification portion, and they'll have a finding, the same finding for every single file that they looked at. Every single one is missing VAWA. Every single one, doesn't have this verification. That will give you auditors, a kind of hint as to what you're dealing with and what to look out for yourself. And that's the basic overview.
Okay, now he said some things in there that I can't stress enough, because he said, look, if you're missing VAWA, if that lease addendum, these are the things that I think when you get ready, because we're ready to transition now into testing and following the HUD audit guide. And no, Matthew, there is no public link to an MOR. You just have to ask the client for it, and they're supposed to give it to you, okay? There is, I don't even think, obviously some of these buildings are private buildings. Yeah, they get subsidy, but I don't know what the legal thing is on that, but no, they do not publish them. But using them as a reference for risk assessment is an awesome thing, but you have to be careful. In this particular instance, if you look at this, you would say, oh my gosh, the babies are eating lead paint chips, all kinds of problems are wrong. And what's really the challenge when you read this? You had the outdated lead-based paint form. You didn't update to the new version of the lead-based paint form. Well, as he said, that has nothing to do with whether there's lead-based paint in this building or not. And so you can get overwrought if you assume too much out of here, I love reading them, but I'm looking for specific issues where patterns are applicable. So when I start testing, what I'm going to do is I'm going to pick up the application first, and I'm going to say, oh, Light, this is your application. Because if the application is wrong, it affects every intake you have. If the lease is not the model lease or not the current version and what the right addendum, every one of those will be wrong. And those are things we do much more at risk assessment. And if you look at some of this, I guess I'll have to make this just a little smaller. They had a 97B. Well, that's not a bad REAC inspection. No exigent health and safety issues in general. I don't. Maybe there were one. What is it? Ari, can you explain the scoring process in terms of the number and the letter?
So the number is health and safety. So that means that there was a health and safety. I'm gonna confirm that because I get confused sometimes also. But the number, I mean, that's a great score, 97. B is the reflection of a health and safety.
So the score.
Yes, right away. Health and safety gets addressed with it, right away within 24 hours, and that's it. Yeah.
Well, maybe at the next VERT class we can bring up a pass report and let them see an inspection.
Yeah, but the B would tell you that there's a health and safety.
Yeah, the B would be that you don't want to get down into the C's.
Right.
That would be more multiple health and safety issues, EH and S. So you look at this, they're managing a couple of problems. This looks much more like a challenge with the tenant. I mean, missing cabinet, doors. Where are the cabinet door fronts going? Now, this is Ari's life, so he probably doesn't laugh about that as much as I do. I see this and I start going, what in the world is going on in these units, right? Well, when you continue on down here, so, there was lead-based paint. They're not using the proper form. And for that, you get a corrective action thing. So there's nothing wrong. And then when you look at this comment here, in the unit, there's crayon in every wall in the child's bedroom. There was a very large hole in the hallway. They're probably having MMA training in the unit, throwing each other around. So probably a family unit with younger kids. And they're getting dinged for something that probably the resident just did. And that's why this isn't necessarily indicative of how well the project is ran. They do annual inspections. Some of it could have happened after. And then they get down to even managing the tracks, move in and move out report. This tells you really what you need to know anyway. 54 days of an average vacancy period. So that one is a pretty good highlight because there's something wrong here. It's a neighborhood. The property itself, it doesn't look bad. In fact, the MOR even says we rock the property and it looks nice outside. So using that has a thing. The issues that I see here that concern me more are things like this. The lease, you didn't use the right lease. This is the VAWA lease addendum. Or they didn't maintain it because it can't be in the tenant's file. It had to be a separate piece. These are the bigger issues to me because they're macro. They affect every one of the audits. Emily, the MOR does not go into REAC. The inspection, when he says REAC inspection, that is the physical inspection that is coming through the physical assessment subsystem. And they're called, we always refer to them as REAC inspections. The MOR focuses on the management side. The REAC inspection is looking at the physical plant itself, the status of the building. And of course, Ari, the problem is we are required to report back on the outcome of any of these sorts of reports, both MORs, physical inspections, REAC comments. We have a place to put that in. But I've never known where to put it in REAC if it's necessary. And please explain again, a 92C score isn't good.
Yeah, so
I'll let you address that.
Let me give you the number system. So a 92C is great. I'd give everyone there a raise. Anything over a 90, you're not going to get another inspection for 3 years. Over an 80, 2 years. Over 70 is 1 year. Once you get into the 60s, that's already, we're talking about serious action. They're going to make you do a full review of your property. You may even lose the property. You may have to hire a new management company. So if anything over a 90 means that the property is in great shape. The A, B, and C relates to health and safety. A means that there was no health and safety things noted. B is that there were, but they were not life-threatening. C means that there was actually a life-threatening health and safety. Now that could mean, no smoke detectors actually will have a little star next to it. If there was a smoke detector not working, there'll be a little star. If there was a sharp edge or something like that, that will come up as a health and safety. Your CGI in the outlets, your test there in the outlets there. What do they call it? CGI? Is that the right?
Yeah.
Yeah, that's not working. That's a health and safety.
I don't know.
Yeah.
TCI.
TCI, yeah. Now the health and safety, you have 24 hours to fix it. At the end of your REACT, they're gonna print it out for you. You have to fix it right away and then send it back to them, and then it's fine. So it sits there on your score, but it's anything, the number is really what counts. The health and safety need to be fixed right away, and those usually are. And so that's not something to be too concerned about. The number is what's key, and 92 is great.
And that just, now, Matthew, he did say that a score in the 80s means REACT in 2 years, right?
Yeah.
So 90 a 3 year, 80 a 2 year thing, 70 I guess in 1 year. Now remember, 60, go below 60, you can't take distributions. You're in an active default situation essentially. So when he talked about 60, that means no distributions either. So that whole conversation is pretty severe for the client.
And when we say requires, that means that's when HUD is going to put it out for auction. But obviously with COVID, it's been delayed, and there's always delays with inspections. So, and now they've changed it where they're only going to give you a 2-week notice before your REACT inspection. So, it's important to keep track of when your last inspection was and what score you are, so you can figure out approximately when your next inspection is going to be. But it's not clockwork, and it's not on the date. It all depends on, on when HUD puts it out on their auction.
Now, Emily, you asked a question about where to put it, and since we're about done with our time, I'm going to take this and we'll address the leases and the other things before we get, we've got to get into some of the forms of the testing. So we'll get into the tenant selection plan on the next session. We'll get into the fair housing marketing plan, although we won't spend a lot of time with it. We will get into all of the other things that show up into the tenant file and talk about the testing. We have slides for those. But to answer your question about chapter 2, if I go into chapter 2 and I come down into the section on the schedule of status of prior audit findings, we're talking about this paragraph starting right here. So the auditor should inquire. This inquiry is required by the audit guide, and it's also required by the current year's government yellow book, government auditing standards, and it's actually required by AUC 935. Okay, so the inquiries have to be made. The client is supposed to tell you about those. We do not have to audit that, but when you get down into the finding, the auditee has this. Here's the schedule of prior audit findings, question, costs, and recommendations. Number 1, the first section is audit findings from the prior year you had open as the auditor. Number 2, the auditee should identify findings from audit attestation or other studies performed by HUD, another federal agency, or a contract administrator during the period that directly relate to the subject matter. Or you can get it into 3, any deficiencies listed in letters or reports issued by HUD management as a result of any of the reviews of the entity's activities that relates. So both MOR, physical inspection, all those things get reported in the schedule of prior audit findings, parts 2 or 3. Okay? That's where it goes. We summarize heavily. We don't need to list, if you're looking at this MOR that we were looking at, you are never going to include all that information in the MOR. So you would never go into this and say, oh, I had this finding, what are there? Probably 25 findings in here listed down through these pages. You are never going to do that. You're going to highlight the bigger stuff and just say we had an MOR. The score was a satisfactory. In this case, it was a below average. So now at this particular juncture, you'd have to look through here and determine what went wrong, because if audit risk is higher, you may not be at a small sample size. And we'll talk more about that in the next session, because we're going to get down to the testing. But if you look through here, they were not getting some of the Social Security for a child under 6 was added to the assistant's household. An elderly preference for applicants whose head spouse or so was at least 55 or older. These, that was on the tenant selection plan. Most of these are not overwhelming issues, and I think, Ari, you would agree with that in many cases this stuff is overblown as to its seriousness, right?
Yeah, absolutely. Yeah. I will say that the rule of thumb with management reviews is, let's say, for example, the tenant selection plan, the things that they check and they focus on are the latest regulations. So if HUD puts out new guidance about the tenant selection plan or Social Security requirements, that's what they're going to check. If there's a new EIV requirement, that's what they're going to check. So they're going to be very, very heavy on the latest in regulations, and sometimes to the neglect of some of the older, even more important things.
Okay, Kathy tells me that we were actually done at 1:30 Mountain Time. She's in there tracking the time. My miscalculations are bad. So we've come to the end of our 200 minutes. We'll address the actual detailed testing, things you need, some of these strategies. We'll do that in the next session. We wanted to give everybody a very hefty background on the documents, the overall requirements. I appreciate Ari helping us out here. I don't have any more open questions. If there's nothing else, Michelle, do you have something to close us out with?
Yes, thank you for your participation. If you've attended as a group, please send a copy of your group attendance tracking sheet as soon as you can to Kathy at ahacpa.org, and CPE certificates will be emailed to you within a week.
Okay.
And we'll also send out my contact information if anyone, we'll get that out, I guess, sometime, right? Or should
Yes.
I don't know, whatever's easier.
Well, maybe you could, I guess you could type it in the chat, or I can put it on a slide for the next class. Okay. Maybe, I don't know what other things we have available, but
and then, yeah.
Ari's put his email out there. It's probably the best way to do that right now. Get his email address. Okay, everybody. We'll see you, guess what is it, in a week or something for part 2. Unless you're on tomorrow for profitability, we're going to go into much more nuts and bolts. So anyway, thanks for attending, and have a great afternoon, and I hope your week is good. Stay safe from the C-19 problem, and we'll talk to you in a week. Hey, Ari, I've got an appointment. Can I call you as soon as I get back from that?
Yeah, absolutely.
About tomorrow? Okay. Thank you.
All right. Thank you. Thank you, Kathy and Michelle and everyone.